Very good morning. Welcome to Trade Live with IG with myself and the big Ronaldo. It's Wednesday, the 19th of March. It's Fed rate decision day.
Oh, yes. I'm quite excited for today. And honestly, Rich, there's no place I'd rather be to hear about the Fed decision rate without with you, mate.
What, are we going to still be here at 6 p.m. this evening?
Yeah, I'm here 24/7.
Because remember,
creating value for our clients.
It is 6 p.m. It's not 7 p.m. Do not tune in at 7 p.m. tonight because you're going to have missed everything as well as half of what Powell says. So it's a common mistake. Now, Frederick and I, our wonderful producer, we're going wine tasting this evening at 6 p.m.
Oh.
No, sorry, 6:30. So Powell will start speaking as we start sipping on the fine. Is it Burgundy, Fred, that we're...
Nothing like
South Burgundy, the Côte du Rhône.
Oh. Nothing like some tipsy trading, right?
So, God, he's going mad, honestly. We've got a new superstar in the gallery today, welcoming Mr. James Watson to the gallery to help out Terence and Cam in there today because, and there is some sad news. We're losing producer Fred on Friday. This is our third last day of producer Fred. So Friday is officially going to be Fred Day. And he refuses to come into the studio, but we will see what we can do. We might get a roaming camera outside into the gallery. Watch him start running. Well,
it is quite suiting that that's Friday is his last day, because Friday is the 21st of March, which is also Kurdish New Year. So a new start for Fred, a horrible new start for us. Just kidding for whoever's coming in, but we will miss Fred.
That's right. So we are on the lookout for a new producer. You couldn't do any worse. So if anybody wants to have a crack at it, then get in touch. Right, good morning to you. Oh, Chukka looking for his Tesla rebound today. I'm not sure about that. There's some horrible downgrades around. Monkey Man sending us an email overnight as well with all the headlines. Thank you for that, Monkey Man. Boise, good morning to you. DAWI Spiders. Am I missing something there? Dowie Spiders. DAWI. Funky Giving, good morning. And Crazy Metal Detecting. Yes, the Dream Team are back. I got a message yesterday.
Yeah.
So, Pete Ward, that bloke Pete really knows what he's talking about. Without any sarcasm. I was looking for the sarcasm as well. The older guy with the grey hair is really good.
Is that Tom?
Tom Roberts. And I'm not so sure about Luke Moore. He seems like a lovely bloke, but he is the younger and better looking version of you, Rich.
Oh, wow.
I'm like, okay. But our ultimate favourite is Ronnie. And that was from my sister. So thank you, Shirley, for your review. Get on Google and give the reviews there. But yes, Ronnie, you are the family favourite.
Well,
so
I love the McDonald family as well. So the love is mutual.
She must be watching with it on mute. Right. Now, yes, Neil predicting the comments going on in the White House. Scott, how are we going to get these debts and deficits down without causing a recession? Because that's the danger that we're starting to slip into, isn't it?
Yeah, I mean, it's such a fine balance, right? You don't want to boost up inflation again, but you also don't want to go into, recession, as they say, and almost have a deflation like we saw in China previously. So Japan's had it for quite a few years. So it's a dangerous play, but I don't think we're getting one. I think we're getting a bit of a economic doping, as I like to call it.
That's what's coming up. Like in Germany, a fiscal doping announced yesterday. However, what do we have coming up on today's show? Ronnie, over to you.
Coming up, 8:40 a.m. After the Dream Team, we have the Psychology of Trading with Isar Bhattacharya. And 9 a.m. we have live from the trading desk with Aaron Bright.
Aaron.
Aaron. And 9:40 a.m. we have trade expectations with my good friend, the ladies' man, Jack Maguire.
Now, is Jack Geordie?
He's from Bolton.
He's from Bolton. Okay, so I thought we had a whole bunch of Geordie fans on the trade desk there.
No, so it was funny because when Jack started in IG as a grad, he had his proper Bolton accent, you know, and we were both in trading services at the time, and I would hear him talk to the clients. Yeah, you see them buttons there, yeah? Press them, will ya? I was like, Jack, you can't talk to the clients like that. That's not your mate.
He's like, just my accent. Brilliant. Right, Luke Moore, sounds like my sister knows what she's talking about. Yeah, particularly hurtful, that one. And yeah, now Supersonic taking you on to your news story in overnight action. We're going to look at what is going on in Turkey.
Yes.
Take us through it.
Yeah, so Turkey, not exactly famous for its political stability. They've yet again proved its worth as a newsmaker in the political scene. So we've seen the Turkish central bank pushing rates up to 50% with hyperinflation. And now we're seeing even more political turmoil to even cause more volatility in the market. So Recep Tayyip Erdogan, the de facto...
be careful now. At some point, I'm going to have to go to Istanbul and get a hair transplant.
I'm not saying
so please don't get me Khashoggi'd.
I'm not saying the D word. I'm not saying the D word, but the president of Turkey,
a very powerful man in Turkey.
A very powerful man, and no one can check his power. He has now jailed his opposition leader who came second in the election last year. The same leader that forced, sort of, what's it called when you have you have an election and then it doesn't get a clear result. Then you need another one.
What, a recount or a re-election?
Not re-election, but it's like, you know, runoff election. You need to have
okay.
So the second party member of the opposition party, he was jailed. I'm sure on very, very valid ground and no political motivation there at all. He also went the same fate as the previous HDP party leader, Selahattin Demirtas, who's also been jailed now for 4 years. For inciting terrorism.
Shall we get the currency up? Because this is absolutely terrifying.
And the results have not been wonderful. Turkish lira has declined at more than 5%. And you can see how it's pairing against the US dollar, and the US dollar is just rallying against it. So
now this is going back to 2023, right? So that's us at 18. Now already when I was running our Istanbul office, the Turkish lira was at 6.
Were you running the Istanbul office?
6, yeah. I used to go out to the Shiragan Palace.
Oh wow!
Taken from a helicopter at the airport and dropped onto the helicopter platform of the hotel.
No wonder Credit Suisse went bankrupt.
Well, that was the least of the problems, believe me. But yeah, the Turkish lira was at 6 at that point. It then went to 18 by 2023, and now we're at 40. I mean, my heart goes out to the Turks that haven't shifted their money into gold or into US dollars. That is just horrific.
Yeah, well, that's why when you're in Turkey, you'll see Bitcoin sort of kiosks everywhere. Exchange your money for Bitcoin, exchange for crypto, wherever you go. So it's no wonder with the hyperinflation that they have. So they have their figures, what they were reporting inflation of 50% or something similar, 80%. But obviously I have family there, and when I'm talking to them, it's absolute nonsense. It's more in the 500% range. You'd go to the shop one day, you come back in the afternoon, and the price of tomatoes have tripled. You know, it's work like that.
God, it's awful. I was in a demonstration against Erdogan once, by mistake.
By mistake? I thought we realized it.
There was 2014. There was a now I forget the name, Gezi Park. there was a protest in Gezi Park, and it'd been going on for 3 weeks, and it was very simple. They were looking to get rid of the park, and this was a really important thing to the locals. So I went down to see it all on a Saturday afternoon and to check out what all the fuss was about, because the market was winging around on these protests. So I went into Burger King on the park square, and it was a 2 floor, so you could go up to the top floor and you could literally look out all over the park. Anyway, there's about 500 police, and suddenly as the sun sets, the police start marching on the protesters. And I think, whoa, with my Whopper in my hand.
Well, that's
starting to get a bit lively here. And they started moving, and then the big armored vehicles came in with the water cannons and started canning protesters. So I thought, right, I'm going to start getting out of this area.
Yeah.
So go out onto the main street away from the square, and people started running because the police started moving faster and faster, and there was screams. So anyway, we all start running. Of course, I turn around to take an Instagram story. And by that point, it's great. I'll see if I can get it up on air later. By that point, there's just hundreds and hundreds of people running past me. So anyway, a car is driving along.
What's going on, pal?
What's it? Why are you all running? And it's so anyway, we ran round the corner, and there was a car, like a taxi, driving. Yeah. And so I flagged down this taxi and sort of begged to get into the back of it. And the 2 people in the taxi let me in. We drove about 1.5 miles down the roads, and they dropped us off at a bar. We went into the bar and had a drink. There was no problem outside that little square, but the media around the whole world was that Turkey is in meltdown, that there's a huge crisis. It was literally 500 to 1,000 people in a square getting chased by police. And you went out to a beautiful restaurant an hour later.
Yeah, well, personally, I love it when a NATO ally sprays down its peaceful protesters. But right, shall we move on? Because if we get stuck on talking about Turkish politics, we'll be here all day.
Yeah, right. So Turkish lira, are there any companies in Europe that still have operations going on in Turkey? Yes, there is. They're called Vodafone.
Here we go again. Here we go again.
So just beware that I think it's about 8% of Vodafone's revenues now come from Turkey, and it's huge.
How much?
And about 8%.
Okay, 8.
Yeah. Because the other 40 is in Germany, where they just passed a 500 billion infrastructure bill.
I had no idea, mate.
And so that's why the DAX is up 17% on the year against the S&P down 15%. So that's something to do with the 50% outperformance of Germany against the US.
Practice that one in the mirror, have you?
And Vodafone has now outperformed Nvidia by 25% year to date.
Yeah, I think they're on par in terms of growth and opportunities there.
Now, shall we talk about Jensen?
Yes, let's do it.
Right, so last night, of course, it was the Super Bowl of the AI world. And Jensen presented the new Rubin chip, but he also presented Blackwell Ultra. Shall we have a look at how the stock performed on that?
Yeah,
during that call?
It went down about 4%, if I'm not mistaken. And the problem with Blackwell and Nvidia, and they've sort of disregarded Moore's law, not Luke Moore, but Moore's law, one of the founders of Intel, of sort of doubling the capacity, of a chip every 2 years. And now they've scraped that to 1 year. So now the expectations they've set on themselves are incredible. And if you just look at the chart, they're setting themselves up for disappointment. But also another thing that's sort of been in the shadows, which didn't get as much attention as DeepSeek, was that Baidu has now launched an LLM that is on par with the American ones. And that's a Chinese company done without the Blackwell chips that are extremely expensive.
When did that come out?
I think 2 days ago.
Okay.
I sat on that because I wanted to share it with you, Rich.
Waiting for the show. Excellent to hear that. So yeah, look, that is it. Does look like we're off for a trip to the Alps there on that graph, but that is just from Thursday. So the rally on Thursday that we've seen in Nvidia from 114, it touched 123. We're now back to 114. That, of course, takes us off the lowest point at 106. We got down to just touching below 105. So
that's a nice dip purchase there, mate.
It wasn't bad, was it?
Yeah.
Kept that one.
Hats off, mate.
Zoom in on that, shall we?
Old boy still got it.
But it's a covered call because I'm short the 120. I'm short 2 of the 125s against it for this Friday, so that they paid out. They paid out quite well. So look, where do we go with Nvidia from here? It's just a range trade, isn't it?
Yeah, I think Nvidia is sort of, it's coming to one we see this sort of reallocation of capital. We don't see that continuous growth in the American tech stocks. It was sort of like a safe bet. You know, everyone was talking about the valuation of these Mag 7, especially Nvidia.
Yeah.
And when the valuation is crazy, but it keeps going up and it keeps producing even more and better, that's fine. You're still buying a good company. But when the valuation is still crazy high, but you're not getting what you expected, or you're not seeing the growth that you wanted, then all of a sudden the traders, the institutional investors are starting to think, is this where we want to put our capital?
That's right. I hesitate to call them smart money because knowing some of the people that work in banks,
yeah, I mean, you work
funds,
there,
I wouldn't
so.
exactly.
Yeah.
You can't, you say smart money. The professional money started selling out in the high 130s and 140s, and that's because every analyst had ended up with these crazy price targets around the 200 level.
Yeah.
Right. If we look at some of the, if we go into tip ranks here, please, chaps, and we look at where, yeah, that's, oh, it's letting me zoom. Nice. UBS, 185. Robert Baird, 195. Now, we did see a couple of people, Bank of America. This is the top banks in the world telling you that their target price is $200. And that was on the 11th of March.
Yeah, it's a bit outrageous, that.
It's just, I mean, it's negligent, isn't it?
Yeah, I think people sort of get stuck in this continuous hype of thinking the AI part is going to continue forever, the capex is going to continue forever, and it's simply not true. I mean, we see Google allocating resources otherwhere. They just spent about a third of their cash reserves on acquiring Wiz.
Yeah.
So
is that a third of their cash?
Yeah.
No wonder it was down 2% yesterday.
Yeah, we looked it up yesterday. They have about 100 billion in cash reserves, and 32 of that went to acquiring Wiz. I mean, obviously they're going to debt finance it, but still it's a big allocation of their capital. But yeah, the notion that Nvidia is going to continue forever, I sort of have to reject it. I still think it's an excellent company. I still think it's a company that is in the middle and the forefront of the AI development, which is the most important technological development since the internet.
Yeah.
But it's now sort of reaching a normalization of the levels.
Well, look, there's Ross Seymour at Deutsche Bank has a 140 price target, right? Now, that's the only other one, apart from D.A. Davidson. D.A. Davidson's at 135. Giluria, right? That's from the 27th of February. So that is post DeepSeek.
Yeah.
And he's at 135. Everybody else is above 160, 170, 180s, and the 200s. It's absolutely incredible. But that's why I think it's, the story's out there. Everybody knows, right? You've got Blackwell Ultra, brilliant. You've got Rubin coming next year. You've got this this path towards $5 of earnings. But $5 of earnings on 30 times PE is $150. Why are your price targets $1.5 trillion higher? I do not understand what they're doing, unless they're trying to get business from Jensen.
Yeah.
Right? If you're trying to romance him and take him out and, you know, tell him he's brilliant and, you know, polish his leather jacket for him.
Have him sign your bra.
And have him sign your bra, bra tuck. Then, yeah, I can understand why they do that. But that is why the hedge funds have their own targets and why they don't rely on analysts.
Yeah, I think that's more than fair. I completely agree with you. We're getting some stick in the comments. They don't agree with us, but that's why we're sitting here.
Boise think it's going to double again in the short term. You cannot be talking about Nvidia, surely. Boise, are you talking about Nvidia doubling?
Well,
now that's what the research analysts are telling you. So, what do? Do you buy stock? Are you long stock yesterday at 123, watching it drop to 114? You must be tearing your hair out.
Yeah.
Or, I'm doing it in a much more wimpish way. I'm just selling the puts at 108, 100, 85, and I am staggering in the short puts.
He's backing off. Not going to double.
Not going to double. Right, there we go. That was a big important term there.
I'm getting some stick from Darwin Nunes here, saying that they're all cash deal. Yeah, absolutely. It's an all cash deal, but that effectively means that they're not giving them stock. Google is not going to take out 30 billion and wire it straight away. They're obviously going to finance and have some more liquidity in this, so they don't put up a third of their cash capital away. Just needed to clarify that.
Right, a little bit closer to home. Shall we have a look at good old M&G, one of my first ever clients. They have post surprise profit rise on cost cuts and the asset management growth. So M&G in the UK, they've been aggressively cutting costs. And yeah, that asset management business really helping the company through the high inflation and interest rates. So, let's see what they're saying regarding looking at the forecast, 5% or more on average over a 3-year period to the end of 2027.
Yeah, I think the sort of UK asset management space is a quite interesting one, because we've seen like very, very established players. St. James Place, I think they used to be the biggest asset manager. I'm not sure if they still are, but we've seen them having a horrendous time with dropping clients and losing credibility. So if a company like M&G, Legal & General, all of these sort of companies can step up in this sort of vacuum, the opportunities are great, because there is capital to be allocated and there is capital to be managed. So I think the asset management space is really interesting, and they're doing a brilliant job. So they're well positioned there.
Yeah. And certainly our friends over at Numis agreeing with you as well. Full year adjusted operating profit, 837 million against estimate of 773, right? That's an 8% beat, is that right? Net outflows of 1.9 billion, but the much lower than the estimate. And they are called up 3%, Mr. McKelvey, up 3% in the pre-market. What other movers have we got? Well, Haleon was subject to a placing last night. That's Pfizer exiting its final stake. So the overhang's gone. The £3.85 placing last night, the buyback took 44 million shares as part of their buyback. I think that was about 200 million. So let's have a look at Haleon, but that is looking up. Up on a placing doesn't happen very often.
While Rich gets Haleon chart up, let me just give a big plug to a company that I think will move on the market, which is the small cap company Filtronic, which has, sorry, I wasn't expecting that to be up. Sorry, guys.
It's okay, that's just your personal one.
Yeah.
Only panicking.
So I think Filtronic is doing quite well, and it's going to continue to do well because they just announced a deepened partnership with SpaceX, who just brought home the astronaut.
Yes, they did. Now, isn't that subject of a movie, right?
Yeah.
If only there was a movie out there which was about a guy getting left behind in space and them taking months and months to work out a way to go and get him.
Because a big company who sent them up couldn't get them down again. And then the president, referring to one of the astronauts, a lady with the crazy hair. So that's that. Maybe it's a satiric comedy, but who knows? But Boeing, on the flip side, they're not going to do so well on these news.
So let's have a look at the returning space woman there. Has she aged a bit in space? Is that?
Well, I'm not sure how
Was she
time.
25 when she went
Maybe
up there?
time works a bit differently up there. 9 months. It's like dog years, you know.
Bless her. How dare we?
Maybe she learned how often we have a full moon while she was up there. She can teach miniature.
Very good. Yeah, so Butch Wilmore and Sonny Williams' original mission on the International Space Station was meant to last 8 days. Landed down, 9 months later. What an absolute hero. So, good stuff. Right, they're back safe thanks to co-president Musk.
Yeah.
Now, we will be back after the break with more jokes from Ronnie and some upgrades, downgrades from me. See you in 2 minutes.
Hello and welcome back to Trade Live with IG. You are joined by the two Scottish best friends, Ronnie and Rich.
Ronnie and Rich. The Ronnie and Rich show. How worrying. Jugger. Genius.
Yeah.
They have a full moon every day.
I salute you, my man.
Yeah, very good. God, it must have been an incredible view, mustn't it? And Waka Waka, yeah, we absolutely taking your suggestions on Tesla seriously because it just keeps on getting hit every single day, doesn't it? We'll look at that in fast markets this morning. That's coming up at 8:15. Any ideas you'd like us to look at, get them in. I'm going to quiz Ronnie this morning. Oh. I am going to really get down, put you under some pressure. I want to see some sweat marks under those big arms of yours.
Whoa, thank God HR is coming in later after this. I hope HR is tuning in.
Right, let's see some upgrades, downgrades, please. It keeps going. It keeps going. Despite a 135% increase in its share price already this year, Rheinmetall goes to a 2,000 euro target in Morgan Stanley. They've also gone the highest in BAE Systems, £20. Thales, 244, and Dassault, 310. What have we got on the downgrades? Ronnie, eggnog.
Yes, happy that you're keeping that Christmas joke alive. Yeah, so we have Siemens, and Siemens have been downgraded by Royal Bank of Canada. They cut 5,600 jobs in their business sector. And then Centrica down to 170p by Barclays. They cut to equal weight. And then Compass Group have been labeled as underperformance by BNPP. Never heard of them, mate.
They really struggle to get direction, Compass, haven't they?
Yeah. Cue the crickets, lads. Cue the crickets.
Right, so what direction are we going to be going in on the open? Well, we have the German DAX looking down 75 basis points. FTSE down 15.15. And the do you know what, the S&P's actually come off a little bit. You see it there, 5605. That was trading 20 basis points higher when I woke up this morning. Copper, look at it, boom, $500 we've got. Let's open the London Stock Exchange and see how those mining stocks are doing. Ronnie, are you excited? Come on, give it some.
I think that's Ange's comb.
Right, so we are off and running. These mining stocks, I would imagine, would be going again. We've got some really good copper numbers there, but Germany slipping back. We're already seeing the altos down 40 basis points. So is it travel and arrive on those autos, Ronnie?
Yeah, I'm not sure if the bottom is reached on these autos, mate. They're continuously getting downwards pressure. BYD came out yesterday, 5-minute charge they're claiming to have. Xiaomi are upping their delivery numbers to 315,000 cars. Keep in mind, this is a company that produced its first car 2 years ago or something, maybe a year ago even.
Right.
The defense stocks, what are we seeing?
Yeah, let's see how those, I would imagine, defense stocks are up. I know the guys are about to go full screen so we can see that at home. We've got Imperial Brands, so we're going a bit defensive there, up on the day. None of the others. Have we got a delayed open on BAE? Is that, it's on, is it? I was surprised it's not up. Rheinmetall is. Rheinmetall's gone to 1,450. We do this every morning, Ronnie, every morning, and I still haven't bought a single share in this blooming German defense stock.
Maybe your girlfriend can share some.
Luckily, we have some in the household, yeah. My girlfriend owning Rheinmetall from €200, and she still got it along with her Rolls Royce. Maybe she should be on here.
Dinner's on her. But I think one thing we both have to admit, that our thesis that the European defense company would decline because the American sort of new military budget and spend would be shifted towards American companies, that was pushed on the European companies. But that's simply incorrect. We've been proven wrong there by the market, Rich. But let's see what else we've got up here.
Yeah, so what have you got on in the demo account just now that's up there?
Well, I actually took a long position.
I tried to say it seriously. I tried.
Well, if you must know.
If I must know. Come on, what you got?
I'm waiting actually. I'm waiting for Palantir to drop down to 65. Then I'm pouncing on that one. So I'm currently short Palantir, even though I'm a believer in it. But let's see what we got in the mining stocks here.
Well, yeah. Why is Antofagasta down on the day with copper at new highs? I would imagine that this would have broken out this morning. Yeah, that's interesting. Right, let's keep an eye on that one. It has been strong, albeit so Monday it closed at 19 quid, and it's now 19.20. In the meantime, copper. Sorry for jumping around, but I just want to have a look. The way that we would look at this on the markets is right. Okay, yeah. So copper on Monday night was at 490. So in the meantime, copper has gone up 3% and Antofagasta's only gone up 1%. That's wrong, because at these prices, Antofagasta is leveraged into copper and is a copper name. And I'm not sure why you would compress earnings when you're leveraging into it. So I am going to have a little trade on Antofagasta here.
Are we seeing market inefficiencies there, Rich?
Has that already jumped 10 pence? Right, 700 at 1929.5. Go. Right, so that is 700 shares in Antofagasta bought. I do want to have it on a hedge though. So what can we hedge Antofagasta with? Well, how are the oil names doing? Is oil still at its lows? Oil is 66.40, down 0.5%. Right. So I am going to take a bit of sector swap, which is in European sectors here. And Ronnie, if I've got 700 shares at £19.40, how many sterling is that? Come on, fast maths.
£19.40. Oh, mate.
700 times 20, 7 times 14,000. So I need 14,000 of basic resources, which is 300, but it's euros, so I need 360. Shorting 360 of the sector swap, and we should see that now in our portfolio. Antofagasta, there we are. So long 700, 13,000 against short 19,000 euros of the sector swap. Where we go. So right, that's going to be a trade of the day. The FTSE's coming up as well. That makes more sense. But let's have a look at the other miners and see what they're doing. Take us through that, Ronnie.
Yeah, so let's see what we got here up here on the list. So the sort of big names, they're all down, not significantly, but close to a full percent, hovering around the 80, 90 basis points. Anglo, Antofagasta, Glencore, Rio Tinto, BHP. I'm having
some Glencore as well. That's insane. Right, 4,000 Glencore bought at 316.25. Go on.
The guy's like a compulsive shopper.
I'm sorry, but if copper is up above 500 for the first time, unless you don't believe in it, then just because of what's going on in the world, I don't see why the mining stocks are down, because the FTSE's down.
Yeah, I mean, it is a cause.
I'll tell you what, I'll hedge it with some copper. There we go. Right, selling copper at 505.
You done?
Done.
Want some more?
Do you want some more?
Yeah, no, I think I'm not quite sure what the reason for the underlying reason for the mining companies dropping so significantly when we see an uptick in some of their biggest commodities. So could be that the market's already priced this in, could be that there's market efficiencies. What do you think, Rich? What do you think is the underlying reason for this?
I am also going to go with some BP, selling 4,000 BP at 437, which is down 14 basis points. So we've got oil down 0.5% and BP's down 14 basis points. We've got copper up 50 basis points and the mining stocks are down 1%. No bueno. I'll take that as a day trade.
Rich is smarter than the market. It's funny actually. I was listening to. Oh,
you're going to hate that if I come back and make money from it. You are going to regret that.
I've already lost enough money on bets with you and Fred. I was listening to the Economist podcast this morning, and they always, because I have the free version, you have to listen to the ads. And the ad is now BP saying, here at BP, we've shifted our focus to increase shareholder value. That's insane. I've never heard of a company that's like activist investor comes in and they're like shifting their advertisement to talk about them going back to the classic fossil fuels. I mean, it's interesting, but it really shows a shift in the market. We saw Kemi Benindorf saying that she's scrapping 2050 net zero. Well,
it doesn't matter what she says.
Yeah, exactly. It doesn't matter what she says.
4 years.
But it shows that the entire market sentiment is sort of moving away from this renewable, more towards the fossil fuel, the defensive industries. Question is now, with how they're rallying, are the valuations still defensive?
Yeah, absolutely. Right. Shall we have a look at Ronnie?
Tesco's had a pretty rough couple of days.
Tesco's is awful. So we've got Marks and Spencer's, and you can see in the portfolio there, Marks and Spencer's, I purchased 3,000 of those at 324. They're now trading 330. So we've made 170 profit on that. Tesco's, I've had a shocker. It's dropped to 322. Yesterday I got done on my £3 puts. So I'm now short 20,000 shares worth of £3 September puts, which I received 10 pence for. I think that's a decent trade. So break even of £2.90 on that. I think that's quite a nice, what, £2,000? If Tesco stays above 290. Now, if they come out in profit warning like Asda, the stock's already down 15%.
Yeah, I think the problem with the Tesco, the Sainsbury's, the M&S, they're not high market.
Oh God.
They're not cheap like Aldi and Lidl. They're sort of in the middle.
Yeah.
And I think the consumer is now shifting to either value, Lidl, Aldi, Poundland, or they're going the remaining, the posh geezers like you, the Waitroses, the John Lewis of the world.
How could somebody say posh and geezer?
Because you're the best of both
In
worlds,
the
my
same-
friend. You're the best of both worlds. God gave you with both hands.
And he taketh away just as easy. Brilliant. Right, for Expo getting beaten up 10%.
Oh,
it does
wow.
not believe that Trump and Putin can come to a ceasefire agreement. Now, of course, we saw overnight that the agreement was, okay, we won't hit Ukrainian energy infrastructure, right? Now, energy infrastructure includes mines, I think, but they wanted the full peace deal there. What Putin's asking for is, of course, right, when there's a ceasefire going on, Europe cannot rearm the whole of the Ukrainian front line.
Yeah.
But that seems to be something that we don't agree with.
Yeah, Ursula von der Leyen wants the EU to start having common weapon purchasing and etc. So it's not really going hand in hand in what he's asking for, Putin.
Yeah.
But what was worrying about for me was that there wasn't really a united front in what they came out in and said. Putin said, yeah, we're looking to, we're not going to hit infrastructure.
Mm-hmm.
And then Trump comes out, or Rubio comes out and says, yeah, we're fully in discussions about a peace deal. And it doesn't...
No, but they are, though.
Yeah, but they're saying different things. They're not saying...
No, the only thing that they disagreed on was that Trump said we didn't speak about aid, right? AID, aid, Scottish accent.
Oh, okay, now it makes sense.
Putin said we discussed military aid. There's a difference.
I see.
They didn't talk about aid as in, what's come over the Egyptian border into Palestine kind of aid.
Right.
They talked about military aid as in Germany continued to send tanks to the front line.
Thank you for the clarification, Rich. I appreciate that.
Maturin saying he doesn't think the ceasefire will make much difference anyway. Nations have woken up to the need for more defence spend, clearly, as Morgan Stanley have said this morning. Shall we take a look at British Aerospace, BAE? Can I still call it British Aerospace?
I call it Bay.
Bay, yeah, that's nice. That's what Terence calls it as well. So new all-time highs this morning. Is that new all-time highs? It is, isn't it? 1690. Here we go. What a beautiful chart. What a beautiful chart. That's incredible, isn't it?
How long will this rally continue, Rich?
Well, I've got to say, every time I see it, I want to sell it, and thank goodness I haven't.
Yeah, I think...
sorry, I have to.
Don't, mate.
Don't do it.
Don't do it.
Oh, tie my hands.
The guy. Anyhow, what I was thinking...
Oh, it's making me do it. Oh, done. 500 shares sold at 1688.5.
Absolutely no self-control.
The trend is not my friend. I got to put a stop loss on that though because it is purely
make it guaranteed, mate.
Yeah.
Yeah, that's
why would you want to short that? 17. The stop will be at 1710. 1711.
So while Rich
take
figures
profit.
out his life dilemma and tries to manage his
1666.
his risk, one thing that really caught my attention regarding the European sort of defense stocks is that they've been on a continuous rally for not only since the Ukraine invasion, but especially now these past days or past months when Trump's gotten into power and he's saying everyone's gonna increase spending. The EU is following suit. The biggest economy, Germany, just got their budget approved to do that. But my question remains: where is the money gonna come from? Like we can.
That's exactly why
we can borrow to fund growth, but for how long? How long can we continue this? And
Germany can do it because the Germans have been fiscally disciplined.
Yeah,
the last
Germans
15
are
years.
always disciplined. But,
Don't I know it?
that sounds PG rated, mate. I'm not gonna go in any further there. But we have countries like Italy, Portugal. They all have to be a part of this as well. The EU wants to have a common united front against the militaries of North Korea and Iran. But how long is that actually going to continue? How long are we going to continue this spend? And then are we going to start
and cut welfare benefits?
And cut
welfare benefits because we need to build another submarine.
Yeah, we'll send the homeless to war, eh? I mean, that's the direction we're going to. I wouldn't do that.
Can I just tell you a story of what I saw last week? To step away from this for a second.
I'm a socialist.
So I'm walking down South Kensington, I have a choice every morning. Do I go into Pret and get myself a coffee and a chocolate croissant? Or do I turn left and go into the tube station, right? A morning last week, I decided to go into Pret.
Clearly.
Now, unfortunately, there are, of course, a lot of homeless people on London streets. The problem's getting worse and worse. Not in South Kensington. The homeless guy was sitting there in a North Face fleece, sitting on a deck chair in the doorway of a coffee shop that hadn't quite opened yet next to Pret, right? This guy sitting on a deck chair like he's on holiday, right, with his sleeping bag beside him, with a proper mug full of coffee and a hat. And he was a homeless guy, but he's sitting there like he's having the time of his life.
How dare he be comfortable when homeless?
I wanted to buy him a chocolate.
You look richer than me, pal.
I tell you, he looked like he did not have a worry in the world. He was watching the world go by.
Well, it's like Waka Waka saying in the comment, "Own nothing and be happy."
Two of the happiest years of my life were being a dog walker in New Zealand.
That sounds lovely, mate.
Yeah.
Was the dogs happy as well?
Well, big shout out to Layla. So right, going back to my ultimate view on BAE and why I do not agree with Morgan Stanley is just look at Kinetic, right? Now, this was an issue where they had to write down 140 million of their US business in that last set of results, and the stock has dropped from £5.12 down to £3.90 since. 40% of BAE revenues come from US defence.
Yeah.
Right? Now, Trump does not want to give money to the UK.
No, of course.
Now, I understand there's very complex products and BAE, and we are the best at making certain things. But I cannot imagine sitting down at the Department of Defense in the US and going, yeah, give those British guys, increase that contract. Contract.
Yeah, no, I 100% agree with you, and especially with Doge and everything else that's going on, where they're cutting costs and they're being more efficient in their spending. It's just irrational for me to think that the funds that they have is going to continue to go to European companies. And even if the European economies increase their spending up to 3%, which they're talking about, but it's never actually going to happen. It's been on 2% for years, and no one is actually doing that, just a few countries.
Yeah.
So it's not going to compensate for the lack of demand from America. So I think now the market is buying the future earnings, but I don't think those future earnings will be at the expectations of the markets.
Yeah, I'm there with you, sir. There with you. Right, it is Fed Day, so we're going to have a look at the expectations for this evening when we come back after the break. It is now 90 minutes past. We do have to go to a break soon. Let's take a really quick look at what the indices are doing. FTSE down 40 basis points, Germany down 60. We've got cable. I cannot believe it's up there. 129.70. What we didn't cover this morning was the Bank of Japan. Bank of Japan keeping rates on hold, but warning, if the economy continues to perform in line with our projections, we will be hiking rates soon. We will be hiking rates as the rest of the world.
At least they're giving a fair warning this time.
Yeah, very responsible. So that's dollar yen 149.44. It's been stuck around that 150 level for a while, and euro dollar trading around the 109 level. We'll see you in 1 minute for Fast Markets. Welcome back to Fast Markets, the part of the show where we put the spotlight on Ronnie and we quiz him. What would he do in that demo account? What am I doing to try and manage the risk that's whipsawing back and forward in both my IG portfolio and my Tasty portfolio? Today, we are looking for, we've got 3 stocks to talk about, but I would like a couple of ideas from you guys as well. What's the position that's burning your portfolio? What's the one that you've got most hope for? And you think that once we get through this little bit of trouble on the old tariff chat, once Jerome Powell rides to our rescue tonight, which is not what I believe is going to happen at all, what stocks would you be having on your shopping list? Let us know in the comments and we shall talk them. But I am going to start with you, sir, on European banks.
Yes. So European banks, it's been really, really interesting for me to have a look at them, because when Trump was elected, we saw the Goldmans, the Bank of America, the Morgan Stanleys, they were rallying, right? They were absolutely flying to the right up in the corner.
Yeah.
However, that sentiment's now shifted. They're all performing quite poorly in terms of the market, but the European stocks, on the other hand,
Look at that chart.
yeah, they've creeped out of the shadows and they've said, you didn't expect us, right? And not only are the Europeans doing excellent, the UK banks are doing really well despite everything as well. They're continuing to rally.
Yeah.
And these are companies that are mature, they're long-term, they're defensive, they're extremely good cash flows, and they pay good dividends. So in volatile markets, in a market where we don't know what's going to come next, I think the defensive banks, they're now turning more defensive with the defensive stocks rallying.
Yeah.
The Barclays of the world, the BNP Paribas of the world, these are the companies that I'm looking at now.
So there was a piece this morning, and I forget who it was. Sorry, my apologies. But it was Tempest. Tempest in the Times was saying, is it time to get out of NatWest? Has it had its run? And if you're, something like a pair trade along the lines of long European banks short in NatWest, or long Lloyd's short NatWest.
I think Lloyd's been quite beaten with the whole car financing thing, but they've put money aside, they've come out clean. They had some. They did a bit of a city move the other day where they sent sent away too much money or something like that.
To me?
Well, you wouldn't be here then, mate. But I think my fundamental belief is I think the UK banks are doing well. I think they're going to continue to do well in the British economy, where we see a continuous need for growth and stimulus. We see
Commerce Bank up 57%.
there you go. But the biggest strength is coming from the Europeans, I think. So I wouldn't do a pair trade where I short one and long the other one. I would be.
What about US then?
I think the US banks, they're not gonna have a great first year of Trump presidency.
This is the XLF, so this is the US sector swap of the likes of Morgan Stanley, Goldman's, Bank of America, etc., etc.
Yeah. No, I'm not quite sure that the American banks will continue. Or I know for a fact they're not continuing the Trump rally, but the question is, will they come back? Mm-hmm. Right? We'll see an increased deal flow. Yes, we see increased, volatility in the markets, which is great for them. But I think they've seen their best days, and I think they're going to come down to a bit of normalized levels, especially with the uncertainty that comes with a Trump presidency, because these banks, particularly with rules and regulation, everything, with new rules and new regulations, new tariffs coming in every day, it's uncertainty that's causing the stock to sort of tremble a little bit. So I'm a bit more focused on the European side, where they really know that they need to catch up. So I think the European banks are interesting. Okay. Sorry, I've been rambling.
No.
I have.
Like it.
Hope the people at home do it as well. But thank you, guys.
Should we have a look at Deckers? Because Deckers is...
Yeah, that was going to be my question, actually. Okay. It's almost like we agreed upon it during the commercial break.
Right, here is my mess in Deckers. Right, just a reminder that this stock has dropped now from 210. Let's have a look at the chart, actually. Let's take this, just show how poor this thing has been. Poor. The ultimate Scottish. My goodness me. Talk about catching a falling knife. That's just incredible, isn't it? I mean, we don't even need to zoom in on that to know how bad that one is.
Starting to decline from February.
So right. I think we talked about it quite often, but Deckers had numbers here, right? Quite obviously, they weren't good. We had inventory problems, and then this bit, so that's down to 160 odd. When it got down to 165, I shorted a put at the 150 level. Then we started hearing about tariffs. Deckers produce goods in China, right? So then we had it come down to 140. So I shorted a 135 put. Now it's, of course, the US sell-off. The whole market has been selling off, and you had like Walmart warnings and general consumer concerns. So now it's down to 115. Now, I know that somebody is also on this trade as well. Boise, was it you or was it Steve Davies? Can't quite remember. But I'll tell you, there's real hope for you now, because every chance that this thing has bottomed, because I have now oversold the upside. And what I mean by that is let's go back to the position. I've now taken the 200 shares because I've been put upon at the 150 level. So I own 200 shares at 150, right? I'm still short the 135 puts. So in essence, I'm long 400 shares, right? Because in April, I'll get put upon at 135.
Right.
And I'm now short the 110s as well. However, I've now oversold the upside, which is selling 300 of the April 130 calls, right? So if it goes up to 130, I sell my 200 shares, and then in theory, if it goes up a lot, I'm naked short 100. Risky, but it will get me out of a lot of trouble if it goes up to 130. It will, hopefully be the last thing. But then at 140, I'd be selling another 200. So I'd be naked short 300 shares at 142, and I'd also be out of my 200 shares. That's when you know,
For me, it
I've
sounds
lost
like
my confidence in the position.
Yeah, no doubt. Doesn't take a genius to figure that out, mate. You can look at the chart. You created yourself. You put yourself in quite a messy situation. I pray for you that you get it out of it.
No, don't say that, because when you're praying or really hoping for a position to come right, it's too late. That's the time to cut. I'm not praying about it yet.
You're confident.
Okay, this is where I am. I went into a load of shoe stores on Saturday to have a look at their Hoka displays.
Yeah.
And admittedly, they are lower. There's less real estate being given to Hoka now because there's more being given to Nike. And that, my friend, takes us on to our good friend Nike, which reports numbers tomorrow night after the close, Ronnie. How excited could you be?
I'm actually excited about that one. I was looking at the Nike chart. Let me get
that up for you.
And
okay, you got that up.
oh yeah, look at that. So we haven't done.
Do you want to make it a proper chart?
Oh, sorry, mate. There's a reason why I'm in this chair and not yours.
There's plenty of those reasons, mate.
Oh,
because you've got a proper job to do out there, sales trading to the stars.
Right. I thought I was lost my invitation to the McDonald family household there almost. But if you look at the chart, like from the drop here on the 25th of June, we've sort of traded at the similar. It's been sort of like range trading. It's been touching, trying to get out of it.
Yeah.
But we're still here, roughly on the same level. I'm not seeing that sort of movement that we wanted to see in the Nike comeback.
But bring it in, because the story is from shorter term, right? So that's the story, and the story is that Elliott Hill has come out, been appointed from right at the start of that chart. Excuse me. You've seen the stock rally to 80, and then he's come out and said, "Look, I'm going to turn this company around, but it's going to take me 18 months."
Yeah.
And it's going to take me quite a lot of spending to get this company back to a premium offering. I'm not going to do it in 1 quarter. Now, Jeffries came out and said, buy as many as you can now. And that was wrong. And that's what took the stock up to 82. So the stock is at the right level. 73 is where it should be if you look at the EPS estimates and you put it on a 26 to 28 times earnings.
Yeah.
It's actually at the right range. That's why I am short the puts around the 70 level. And I'm short the calls at the 80 level, because it's going to trade 70, 80. That's where it should be.
Yeah, that's the sort of range that we're at now, between 70 to 80. But my question to you now is, now we obviously both firm believers in Nike, the Nike brand, and the new leadership and the comeback. We saw a little tease, no pun intended, with the Skims partnership.
Yep.
The market really liked that. The Jeffries recommendation, the market really liked that. My question to you is, what's the catalyst to get them to break through that 80 level, that 85 level? Where's the catalyst to see?
Purely time.
Time.
And this is the wonderful thing about the options world is if you take just a quick look at my portfolio, chaps, you'll see I'm short the 70 puts for March, short the 80 calls. But then I'm short 65 puts for April, short the 82. So I'm giving myself a bit more of leeway because I know that it can go further out. However, we go down to December, which this company starts to turn around, and I'm long the 77.5 calls, and I'm short the 97.5 in 3 times the size, because that's when it starts to turn around. In December, end of the year, people start looking, what is going to be the best stock of 2026? And it's going to be the swoosh. But the swoosh is what is happening. We're going to see, they're going to be crap numbers tomorrow night.
Yeah.
But he might talk the dream and he might give updates. But the costs that he has to take are going to be taken. So the numbers ain't going to look great. The stock might drop to 68, but then within 3 months, you might see it back at 75.
And we have a 2026 World Cup, which we all know Nike dominates. But if you're not like, sorry?
Where is it?
It's North America, so Canada, USA,
Oh,
Mexico.
wow. Well, there you go.
Yeah.
So long Nike, short Adidas.
Yeah, and if you just want a simple trade and you don't want to have a spiderweb options like Rich, Nike is in my ISA.
Yeah. But are you going to buy more when it's €68 on Friday, $68 on Friday?
I mean, I get paid next Friday, so it might be next Friday that I'll pick up
Good.
somewhere.
Boise, do people desire the Nike brand like they used to? No, but they will in 6 months. They are doing incredible things to turn that company around.
Lululemon, that's a bit above.
Lululemon, I'm short the 400 calls. That is the pair trade. Long Nike, short Lulu. Upside. I wouldn't be short the stock, but
I think we're getting shouted out in our ears.
we are. Now, who's on next, Ronnie? Do you remember? It's Isar.
Yeah, I have some HR complaints to make to him about my treatment here, but
HR, the guy's turning the company around. He's not your HR manager, mate.
sorry, mate. I work with revenue generating stuff, so I wouldn't know.
Oh, I'm sending that to Pega.
Please don't.
I won't really. Wonderful. Thank you so much for joining us. As always, my sister blowing up my my WhatsApp there. Yeah, isn't he wonderful? Oh, he's looking a bit tired today. Oh no, she's talking about me. Brilliant. Cheers.
I hope so.
Right, see you after the break.
trader friends, and you are live with us on the Psychology of Trading with myself and Issa.
Hi.
Issa, I'm so excited about this segment because it's about having patience in trading, something I am greatly lacking in. You see me biting on a stick. You see me kind of like doing that thing like that, right?
Yeah.
And then sometimes I just get because I don't have patience, I just avoid that trade.
Yeah, so last week we spoke about time perception and how like actually when you're in heightened emotional states or during really exciting or kind of scary times, your perception of how that time is going varies, and that might lead to you either under trading or over trading during that time. Today we're going to kind of take time perception and go the next step further, which is all about kind of three concepts that are related to each other. Like you said, patience, which I think is really important. Secondly, the idea of kind of self-control, and then the third idea is about delayed gratification. And I think all three of those things are a little bit related to each other and all impact how we trade, especially during quite volatile times.
So this is great because we have seen, some of the most volatile markets I have ever seen in my life, right?
And I think the intraday moves have been pretty extreme. I think we've seen like realized vol spike in a way that I think implied vol hadn't like necessarily given a heads up that would happen. I think personally, when we had the initial leg down, that to me felt like a very tradable opportunity. But actually we're now in this kind of quite uncertain period where I think my ability to have like quite high conviction about what direction it's going to go is actually quite low. And so I think this is the kind of moment where like self-control and patience and being thoughtful about what moves you're making are really important if you want to be a winning trader, and if you want to kind of balance both things, which is maximize how much you get out of the volatility, but at the same time manage risk and manage how you're thinking about the whole situation.
Is this similar to how when I talk about, I always put limits and stops in? And I like seeing it play out almost without me being there, because I have this thesis in my head. I haven't had something external or someone tap me at a club or something, say, hey, have you heard about this? Oh, you need to change it right now. And then you go there and then you mess up the trade, right?
You're reading tweets about Nvidia and you're like, wow, I need to trade.
Yeah. Oh my goodness. Or for example, Andy Gavin, and we're talking about this. He had a very complicated option strategy on.
He's doing the wheel, right?
He's doing the wheel. He's doing the wheel, and he's also doing leaps, which is out of my wheelhouse. But I'm learning that from him. But he spoke to Rich a few weeks back about Tesla, and he got really worried by Rich, who had a different thesis. And so he unwound it, and so there are kind of instances, I guess, when you need to hold on to that theory and see it through.
Yeah, so we'll talk. So I think what's useful is if we start with some of the basics of like, what do we mean by self-control and delayed gratification? And then we'll talk about kind of how does that vary across individuals and what does the reality of that look like? And then we can talk about some strategies for managing that. So I think having pre-planned exit and entry points is a good strategy for that. But I think if we think about those three things in order, so I think what do we mean by patience? Often what we mean is that you have the ability to prioritize long-term opportunity versus short-term rewards. And so the most famous psychology experiment to do with this is what's called the marshmallow test. The marshmallow test is where they got a bunch of children in a room individually, and they basically gave them...
Get this up, hold on a sec.
Yeah, we'll get it up. But it's extremely cute. So basically, the way the experiment works is you give the kid one marshmallow now, and you say, I'm going to leave the room as the experimenter. If you don't eat this marshmallow while I'm away, I'll come back and give you two marshmallows.
I need to get the other screen up, sorry.
Yeah, that's okay. So while we're doing that, so the experiment is very simple, which is like, okay, if you wait a little bit of time, the return is basically doubled. And what you can see is actually in most of the versions of this experiment, children really struggle.
Oh, look at that.
Really struggle. He's smelling the marshmallow. This person is like totally obsessed with it.
This one's praying.
I know, right?
Praying over the marshmallow. Oh, please.
And like, this is a perfect example of trying to do this kind of patience-based delayed gratification, where you know for sure if you wait just a couple of minutes, your return is going to double. But because of the temptation in the moment, because it's very hard to control like the feeling of that instant
I'm like this
reward-
kid. I'm
Just don't look.
don't look. Avoid the trade. Don't look. Ooh.
And so it's you can see them really struggling. In some cases, they actually just eat the marshmallow. In some cases, they really do wait.
One's knocking his head against the table.
You can just see it. Like, look at the agony. And like, actually, I don't know about you as a trader, but like sometimes when I'm in situations where I don't know what the right move is, I still end up looking at potential trades a little bit like these kids looking at the marshmallows.
Yeah.
Because I think doing nothing.
Yeah.
For a short period of time, or staying in cash for a short period of time, feels really painful.
It does.
And you feel like you're losing the short-term potential benefit of that, even if there are longer-term opportunities you can deploy capital more effectively into the kind of in the long run. So what does the marshmallow test tell us? So I think we've pulled off the video.
Yep.
So I think basically what you find is that some kids eat the marshmallow and some kids wait. There's a whole bunch of different reasons and factors that go into whether the kids wait or whether they don't wait. But what we know, which is like super fascinating, is the kids who are able to wait as adults have higher incomes, because the ability to delay gratification and learn to kind of put the immediate reward aside for a longer term benefit is super correlated with a bunch of what psychologists call non-cognitive skills. Skills that are like really crucial to how we go through our day-to-day lives, but are not necessarily related to how good a decision we're making or how thoughtful we're being about a specific answer. And so like, while it's not like I'm intellectually smarter because I can delay gratification, that non-cognitive skill is valuable and generates more income for you in the long run. And that's true for these kids, but it's also true when we think about like trading. And there's a couple of things worth keeping in mind. Like number one, there are just some individual differences. Some people are just better at doing this than others. Now that's a really unsatisfying answer. But actually what you find is that like some of those kids were better at age 5 and age 7 and age 9, etc. What you also see is there are a bunch of kids who are really bad at age 3, 4, and 5, who by the ages of 7 and 9 are suddenly really good. Because it turns out this is also a skill that you can practice and you can learn and you can build strategies around. So one of the kids there that you saw was trying to not look at the marshmallow. And honestly, that is an entirely valid
Oh good. So my avoidance is actually a strategy.
Yeah. So deliberate and thoughtful distraction is a really good way of avoiding like busy work or avoiding ineffective like temptation.
FOMO.
Yeah, exactly, right. And so like being deliberate about, okay, like right now we might have like very volatile markets. Maybe I just check social media a little bit less because I know that's an area where I get tempted to make trades that aren't necessarily the most effective. Or maybe I dial the frequency that I check my long-term buy and hold portfolio way less. So I'm only really checking my short-term trading portfolio. So those kinds of adjustments are one really effective way of building a degree of resilience to temptation and self-control in that context of kind of delayed gratification and patience. The second thing worth doing is trying to establish a kind of regular structure or process around how you think about some of these decisions. That can be a really effective way of building patience. So like your example of having pre-agreed exit and entry options is a good way of trying to ensure discipline in a way that's almost like a little bit algorithmic, and then having the wherewithal to like stick to the plan. I think often it's very tempting to like break the plan.
Yeah.
So that's another strategy. A third strategy that's really effective is trying to think about like the emotional state you're in and trying to decouple the short-term reward and how heightened that feels versus the long-term gain. So what you can do is, we spoke about this in the time perception session last week, but like one of the things you can do is like really dial up the long-term reward and dial down the short-term pain. So what you might want to say to yourself is like, okay, sometimes when I'm making these short-term decisions, I'm not making as much money. And actually, here are a couple of long-term opportunities that I'm just waiting for the right entry point. And the return on those is going to be much better. Like maybe it's a 2-week trade rather than a 1-day trade. or even a longer time horizon, right? But being very clear about what that long-term opportunity is makes it feel less abstract and less far away. So even like what I try to do is, I mean, I don't do this as frequently as I should, but like I do try and diarize some of my like planned, like slightly longer term trades and what kinds of triggers I would look for to start thinking about entry. And actually, if you start doing that really deliberately, you can bring those like the delayed gratification like close
Forward.
Yeah, exactly, closer to now.
So I have a diary that says, where is my money?
Yeah.
And what that means is on volatile weeks, and please tell me if there's a better way of doing this, because I'm sure there is, trader friends as well. But on days when it's really, really volatile, like we saw in the last few weeks, right? Yeah. And just kind of like open the laptop, Tesla down 15%. Okay, it's way too volatile for me. Close the laptop. So I then use that moment to make my watch list to kind of say, well, when things stabilize, these are things, these are the stocks, these are the companies that shouldn't have been beaten down that much, but they were pushed down anyway, and they've got good dividends, good solid moats, right?
Yeah.
And so I start building my shopping list. Lots of trader friends
got a couple
also.
of questions.
Yeah, let's look at some of those.
So we have, took me 15 years. Oh, if we just pull up back to the chat. Yeah, there you go.
There you go.
Took me 15 years to learn patience in trading. I think that's totally, I think that's like really a resonant point from Maturin in the chat. Like I think for a lot of people, it's one of the earliest and most common mistakes that they make when they're both when they're trading, but also when they're investing, to be honest, which is just checking your portfolio too often, not having a clear plan, and then just kind of, I mean, this is a not meant to be a demeaning term, but it's something that I think characterizes when I first started trading. It's just clicking buttons because it feels productive and it feels good to be busy and making trades. We've got a question. Arsax has said, I like the kid taking some bits to taste. I think
it's that licked it and put it back.
Yeah, exactly. I think that's actually a little bit of a trap because once you start to break the barrier of like temptation, then it's actually very hard. It ends up being, there are like some situations that end up being a bit more like a slippery slope where actually, oh, I've only done a little bit and it didn't end so bad. You can convince yourself that actually it's good to go a little bit further and a little bit further and a little bit further. There's a whole psychology phenomenon that maybe at some point we should talk about on the show.
Yeah.
Which is called escalating commitment to low value paths, which is
Sounds like a dating.
Psychologists are really bad at naming stuff. So a lot of things have names that are either really long or really like counterintuitive. But escalating commitment to low value paths is really this, it's a combination of different biases we have, like the sunk cost fallacy, for example, that basically show that when stuff is starting to not go to plan, we actually tend to double down rather than taking a step back and reflecting on whether it makes sense. And actually this is something you see a lot in people who are making trading decisions.
Or cutting your losses.
Yeah, exactly. And so like actually being clear about when to do that. And people bias in both ways, right? Which is they don't cut their losses enough and then they trim their winners too much. And actually both of those will really impact your returns. We have Funky Gibbon. Does this give us an insight into Trump's decision making? I think it's always extremely difficult to get any sort of insight into Trump's decision making. But I think some of this delayed gratification stuff is like, it's actually really common when you look at like major decision makers on like even in businesses or in global forums. It's a very common issue in some private equity deals where they're trying, because of their time horizon, it's actually much shorter than what a typical investor's time horizon is. You often find them eating lots of the marshmallows immediately rather than waiting for them to double. And so like, I think whatever your incentive structure is also has an impact on kind of how much you're able to delay or not delay. I see Andrew.
Yeah, Andrew McKilvey.
I've been looking at some marshmallows for 10 years, still waiting for them to double. I think this is also, I think, another like thing to keep in mind. So like in that experiment we had with the kids, they were given a guarantee that they would get 2 marshmallows. Like we don't live in such a simple world where returns are certain. And so like trying to think deliberately about also your like risk tolerance to waiting. So one of the things that both psychologists and economists talk a lot about is time discounting, this idea of like how much should we reasonably discount the future versus today. What you find is there is a bit of a bias from some people to discount overly the future versus today. Is why people don't save for retirement, it's why they underinvest or they misunderstand how compound interest works. But you can also have situations where, because of the uncertainty, you should be discounting more than most people tend to. And so we spoke a little bit, not last week, but the week before that, about ambiguity and uncertainty. Ambiguity is one of those things that should generate a higher discount rate. That would be entirely rational to do. And so, like Andrew is saying, like if you have lots of uncertainty and ambiguity, you should discount the future a little bit more.
Yeah. There is another aspect that I feel isn't covered too much by psychology and trading psychology. And Andrew McKilvey, maybe you fall into this camp. So there are also some of those that delay gratification so much that they end up with a pile of marshmallows, but they can't stop the marshmallows. Like
the
what
Stoics.
What am I doing with the marshmallow right now? I had no idea, because you've delayed it for so long. And there's this is a real issue out there, because I love, can I say this on there without looking really boring? I love Excel spreadsheets.
Yeah.
I love Excel spreadsheets, and I love being able to, look into the future, into future Ange. But future Ange now, and I've looked at the spreadsheet, and when I keep changing, at some point,
future Ange becomes current Ange, right?
Yeah, eat the marshmallow.
Yeah.
And there is a real danger out there. People don't realize this, that you can be over marshmallowed.
Yeah.
And then how do you then change that up? Because you can be overfunded in your pension if you really front loaded.
Yeah.
So understanding that as well, it's like if you've been someone that saved all your life, when it's time to spend it, boy, is it hard.
And like we said, like there's a lot of individual differences in how much people are able to do this delayed gratification.
Yes.
And actually, if you index too high
Yeah.
on delayed gratification, you also tend to miss a lot of the short-term opportunities that you might have.
Exactly.
Whether that's consumption, or whether that's a trade or
Yeah.
investment. So I think it's always a balancing act.
Funky Gibbons, like, I'm with you, Ange. And we sat there with like overflowing marshmallows going, I don't want to do it right now. Like, I can't get out of the room because
It's a muscle, right? And you have to build
It is a
right
muscle.
balance off like how you want to make some of those trade-off decisions.
Yeah. And maybe that's another show altogether.
Yeah, maybe one thing worth saying is I'm not here next week. So if you want to practice delayed gratification and you're interested in more psychology stuff, you will have to wait a week because I am taking a bit of a holiday.
And a well-deserved holiday too, because we work Issa hard over here. He's going to the balmy climes of
Singapore.
Singapore.
Love it, yeah.
Oh my goodness, the food and everything.
I think it'd be great.
Everyone's going, whoa.
I'm going to have no delayed gratification while there. I'm just going to be consuming.
Yeah, just front load.
Yeah,
Front
exactly.
load, baby. Front load. Any other questions, do pop them here. Lots of our trader friends have been asking us for how to trade the Trump roller disco. So when you are out in Asia as well, if you could bring back some Asian nuggets, some Asian
Wisdom.
trade ideas, that'd be great.
Yeah. And
Interestingly enough, one of the great people that has run studies and talked about delayed gratification and patience as a virtue in trading, I think his name is Gartner.
Okay.
And he's written studies about this. He doesn't like Bitcoin.
Oh, interesting. Wow.
Yeah, or at least in 2024, he said, I don't like Bitcoin, not buying Bitcoin. Of course, got slammed.
Yeah. Bad trade.
By that, but
Fine, good traders make bad trades.
so it's an interesting one. So if in Asia, you can give us some edge.
Yeah.
Please.
I love that one comment from Jugger. If we wait a week, will we get double? I will try and provide you with as much edge as
No
possible.
pressure. Yeah. Thank you so much. Always a pleasure. And stay where you are, because we are coming back with more right after this. Hey, welcome back to Live from the Trade Desk with myself and Aaron. Hey,
Morning.
good morning. How are you?
Very well. How are you?
I'm very good. No gilet.
No gilet.
What's
no.
happened to this?
I know.
Is it a ban by the gallery?
Yeah.
Oh
It was.
my
It's
goodness
creating
me.
too much rustle.
Oh.
So I'm going to either have to position the mic slightly better, or I'm going to have to just stock up more quarter zips.
Well, I was hoping that not only would you have your gilet, but you'd bring your latest Amazon buy, your crystal ball.
Oh, the crystal ball. Yeah, it seems to be working, but it's a rather temperamental crystal ball. Let's say.
Well, it seems to be working so far. But also markets having the sort of like mixed. The for the U.S. side, still seemed like the puke out was still in play when I checked, listening to Jensen's speech yesterday. But right now we're seeing signs of stabilization, right? But still early signs. It has.
Yeah, I think what I've been discussing with other sort of market commentators, analysts, that sort of thing, does feel a little bit like a dead cat bounce.
Yeah.
And I was actually talking to Rich about this yesterday. There isn't this sort of shift in sentiment at the minute to sort of see sustained, upward movement in the markets. I don't think, to be honest, because we're still at a period where we're at potential US economic weakening. We're at a period of general concerns over a little bit of inflation still, and over tariffs. So I think that is still on the mind of investors, even though we're seeing a little bit of a rebound in markets. It doesn't change the fact that obviously valuations have come down a bit, but we've still got all this macro noise going on, and because of that macro noise, there hasn't been this sort of catalyst for growth, I guess you could say, to see the change in indices.
Yeah, that rotation still in place. Speaking of indices, we are still seeing, for yesterday's session anyway, a big, move into Germany 40 and the FTSE. Just adding that to my workspace right now.
Well, this is a really important thing I think we've seen, just given that the past couple of years they've been quite serial underperformers, with the exception of the DAX actually. But I would say sort of on aggregate, European indices have been serial underperformers of US and US tech, that we're almost seeing now, based on a valuation argument, based on the tariffs, and based on, I guess, you've got this European defence play. So we're seeing some nice outperformance from European indices, which is a rather strange phenomenon of late.
Yeah, we've also got, the debt loosening of the coffers in Germany now loosened.
Yeah.
And hopefully that's going to, stick a dynamite into the back of Germany, and hopefully that will...
Definitely, they need it.
Yeah.
Because they are lagging a bit, their economy, and if they get a bazooka stimulus, that tends to alleviate some ailing economies for sure.
We've also got, of course, the conclusion of the Fed's two-day meeting. Fed widely expected to keep rates unchanged.
Yeah, last time I checked, it was 99%.
Pretty much baked in, people.
Yeah.
But there's still this belief, right, that on the street that the Fed might slow or pause bond holdings under that thing called quantitative tightening now that's being bandied around. The other key thing that watching as well is that we had overnight some action over in the Middle East. You've always said that this is likely to happen.
Yes. Well, the reason for that, I think, is we obviously saw a deal between Israel and Hamas over the past month, or really since Trump came to office, which saw some hostages being released from Gaza in exchange for prisoners. And there wasn't an agreement on the second stage of the deal, of the ceasefire. And, for the past couple of weeks, I think we've been in this period of limbo where there has been this sort of very fragile ceasefire without any official ratification of it. And Hamas have been allegedly rearming themselves, which is why we've seen a return of hostilities, in the Gaza Strip. And we've also seen the Houthis getting busy in Yemen. They've been firing some missiles, and they've declared that US ships are no longer allowed to enter the Bab el-Mandab Strait, which is between basically the path up towards the Suez Canal. If we have a map, I can point it out.
I love it. I was with some analyst friends the other day, and remember a few years back when you had that ship that was stuck on the
Yes, the Evergrande.
Suez Canal, and lots of tankers and lots of ships were kind of unable to get through, and there were reports of rotting meat and
and you had to go through the Cape of Good Hope, which I mean is an extraordinarily more higher cost and time.
What was interesting is we were trying to figure out the cost per day. It was something astronomical. That was people like the reports of people throwing goods off the ships, into the sea. But looking at the VIX, I'm surprised, given all that, that we haven't seen a sustained hold above at least the 21 level. We've now come back down, trader friends, to around the 20 handle for the VIX. I have been tapping my Vanguard friends on the vol desk. Vol has been coming down, and also we're starting to see signs of a slightly more positive skew for the markets, but it's still early days yet. Of course, how the Fed reacts to current events, i.e. Trump tariffs.
I think a lot of eyes are going to be on the speech that Powell gives. It's baked into the cake pretty much that we're going to get a pause or a hold this evening, I believe it is. And, it's the rhetoric which is important, because Jerome Powell has had this almost godlike ability to move markets with his speeches in recent years. And, that doesn't appear to have gone away, given the fact that we're now entering a lower inflation era, but a higher recession risk era. And obviously, the Fed now has a bit of a dual mandate with employment and interest rates and inflation. So really interested to see what he has to say.
Yeah, April 2nd, also key dates, not just because Trader Friends Trade Live with IG is moving to a new site. So if you haven't already done it, I know most of you have, please make sure you go and add yourself to that new site. Don't be like Monkey Man, who front ran the site and was in there for a bit earlier this week and was the only person in the chat going, where's everyone? We're like, come back, we haven't moved yet. So April 2nd. But the reason why that is also a key date, because that is when we're expecting the reciprocal sectoral tariffs that Trump said were incoming. Just putting the chat up at the moment. MH saying it's a quarter zip. Well, he's been banned from the Gilet because apparently it rubs the microphone. Neil saying we expect 2 cuts in the second half of 2025. However, the FOMC median dot plot may not be revised lower today, so still signals only 1 cut in 2025 ING. What do you think of that?
Yeah, I think there's a lot of truth in that. That there is, in the sense that yes, cuts are likely to come, but they tend to have previously been priced in a lot higher than expected. But I think that seems like a sensible estimate, given the fact that inflation's now at a sort of okay-ish level, but not. I mean, still got this kind of sticky services inflation, but also at the minute there isn't a clear sign of a recession. There are signals that we might be entering some kind of slowdown, or the US economy is not in its optimum period, but I don't think that the Fed will sort of, preemptively cut rates, potentially. Even though Trump is keen for that and pushing that, the sort of Federal Reserve are sort of a bit more prudent and a bit more data-driven, I would say.
Neil also chiming in saying US slowdown or recession. Monkey Man chiming in saying at this point I'm leaning towards a recession. Any of you trader friends have a view on that, please chime in as well. And we can certainly look at trade ideas for both. I mean, the rhetoric is and the mood music is changing, isn't it? That's why we talk about skew a lot on the show. And the skew is starting to move from slowdown to recession.
Yeah.
But that's not to say it doesn't move back, trader friends. Remember last Christmas?
Oh, absolutely. And Neil's just made a good point there. You have to have an eye on growth and inflation, because that's this sort of dual mandate that the Fed has, that it's got to be looking at both.
Yeah. And speaking of that, I'm going to show you some pictures if I can, which I also sent to Issa yesterday. But this is, let me show you if I can bring it over. This is the price of eggs in San Francisco. 22 bucks 49 cents, and that is in a Costco.
How many eggs does that get you?
Oh my goodness. Oh, let me try. There's also a limit to how many you can buy. So that is, I think USDA grade AA 5 dozen, but there is also here, so that's 2 dozen, $8.99, but it used to be a lot cheaper. And, the prices everyone is saying is, triple, quadruple what it used to be. And so, inflation is a real thing over there, real inflation.
Get a weaker consumer.
Yeah.
When you have sort of these items which are quite essential to cooking.
Yeah.
Then, and
going out to eat.
Absolutely.
Yeah.
Absolutely. Then what are people going to do? They're going to have to cut back on some areas.
Yeah.
Holidays. That's why we've seen the airlines.
RSACs, the US airlines reacting to that far quicker.
Well, absolutely, because it's the first thing you're going to cut back on. Unfortunately, as much as we all love holidays here, it's a luxury item. And, having a well-stocked fridge is more important than going to the Maldives or Mauritius or Europe or anywhere for that sake.
No, I don't know. I suspect, Monkey Man or Andrew McKelvey's fridge is pretty, well stocked and quite expensive stuff in there as well. Respondents to the March CNBC Fed survey have raised the risk, trader friends. So just be aware, to have your eyes on not just like the Atlanta Fed watch tool, and also the credit card data that you get from the US. If you're trading the US and want to find out whether it's a recession or it's a slowdown, but some of these forward-looking surveys, if they give you signals that are raising the risk of recession, then you need to try and fine-tune your portfolio or certainly your trading positions to bear that in mind. This is the March CNBC Fed survey, and it's raised the risk of recession in the US to the highest level in 6 months.
Yeah.
So
really not surprising given the previous data that we've seen, given basically everything that we've discussed today. There are cracks beginning to form, little fissures, I guess you could say, and the tariffs are likely to add to this a little bit if they go through and they're sustained. We see a weaker consumer as a result of tariffs inflating prices well across the world, but in particular in the US and parts of Asia and maybe Europe as well.
Yeah, I mean, Goldman Sachs has cut its growth outlook for the US as well, 2025 growth estimate from 2.2% to 1.7%.
That's not an insignificant cut, I would say.
We all know, we've seen this before when we've got rising tariff walls left, right and center. All that really means, if you filter it down, as higher cost to consumers.
Because businesses have this pricing power, which they're going to want to grow their earnings. They're going to want to ensure that their share price is doing well and that they've got a decent set of earnings and a decent war chest. And the best way to do that is to ensure that their margins are strong. And if you're facing increasing costs, then you're going to pop up your prices if you're able to.
Just whacking up the Hang Seng for everyone as well. Thanks, Terence. It's good to note that for those trader friends I've been trading the HS50, they've been doing really well. But also bear in mind, have your take profits in place, because this could change April 2nd, right?
I was chatting to the sort of Asian and particularly Chinese indices with Chris Beecham yesterday, and we were saying it's almost like they're being spurred on by the hope of this sort of bazooka stimulus in the face of tariffs, really.
Yeah.
So really interesting to see that. And CS300 also a huge big performer.
Exactly. But if these bazooka sort of help doesn't come through, then we are in sad times for these
Definitely.
indices. They've done so well.
Of course, yeah.
So make sure you lock in your profits, because we were waiting for the bazooka stimulus after the first shot across the bows in October, and it didn't really
We
materialize.
only got it in September. We got that big one in China in September.
Yes,
but then
yes.
nothing else happened.
Exactly.
Yeah, yeah,
Everyone was like, "Oh, it's all coming. It's going to come
we
swiftly."
sort of,
Yeah. Even the Chinese and the analysts on that side, because I always keep close contact with those in Hong Kong and mates of mine in Singapore. They were expecting it to follow through, but it was just a one-off and it fizzled out. Now, bearing in mind historically, everyone's talking about these tariffs, but in all honesty, we're just at the tip of the iceberg, right? This could get a whole lot worse.
Yeah, and what's also interesting to note is just from our sort of data side of things, we've noticed sort of increased activity in K-Web, which is sort of a big beneficiary of this sort of stimulus.
That's green shares, isn't it?
It is indeed. So it's basically a Chinese tech play, if you will, and it's performed quite well over the past weeks and months, really. Even though China's had this, number of years of underperformance, I'd say since sort of 2021, 2022. More recently, K-Web has been quite popular on our platform for clients looking to get that Chinese tech exposure on our share dealing platform.
Yeah, Frank Caberna will be happy that you said that, because he, for a long time, was China Frank. So at Tasty, you kind of get a nickname if your trade is going down money, going the wrong way. So for a bit, I was Burberry Ange. he was Frank China, but now he's Happy Frank China, because it's going his way. For those of you that are not familiar with the K-Web, it gives you broad spectrum access to not just e-commerce, but their telecommunications side of things over there.
Gaming, all sorts of things, yeah.
Yeah, but if this does get worse, just take a look at history, because history doesn't repeat itself, but it tends to rhyme. Trump has already repeated a promise to slap 60% or more on imports from China, and so far they've only raised around 20%, right?
Yeah, and
there could be more to come.
To sort of add to that, what you're saying about beware of the risks. It's this sort of instrument is quite idiosyncratic. It's Chinese internet equities you're looking at there. So look, it's likely to have a place in many investors' portfolios potentially, but obviously the age-old saying is to ensure that your portfolio meets your risk requirements and your risk tolerance, and has ample diversification, because an instrument like this has got its some excellent benefits potentially, but obviously it's quite idiosyncratic and focused towards one very specific area.
Yeah. So let's have a look at some spaces that could hurt, for example. So I'm going to hit up soybeans, because soybeans is it's one of the first few to be impacted. This is the daily chart there, and you can already see that it is heading lower and hitting a bit of a base there, as you can see. This is the daily chart. But soybeans tend to be one of the first to get hit by agricultural levies. China, of course, is still US soybean farmers' top export market. I find it really interesting that the top thing that China consumes, one of the top things, it's like a staple, right? You have soy sauce and all that. They rely on the soybeans in the US. Guess how much, in terms of soybeans, how much of American soybeans, in terms of their production, was sold to China in 2024?
The percentage? Well, it's somewhere between 1 and 99.
Yeah. Come on, you can take a bigger. Come on. Anyone on the chat? Monkey Man,
I'm going to say,
Andrew, Steve?
35. More.
Yeah.
So
Come on.
Was it more than 50?
Yeah.
65?
Well, it's more than 50%. It varies, but it's always more than 50%.
Okay.
There's also a lot of things that you can look at to try and trade the tariff tit for tat. Don't forget, we've been here before, so there's nothing stopping you going back to that time to kind of look at what happened. But of course, there's also all the levies that could go on the chips and the tech companies. So we've certainly seen antitrust probes already into the likes of Google and Nvidia. But let's have a look at Illumina. Are you familiar with Illumina?
No, I'm not too familiar with that stock.
So Illumina is one that I am looking at adding to Workspace. This is the daily chart. Have a look at that stock, people. And that is since, since all this tariff malarkey came into play. A ban on imports of gene sequences from Illumina. So they sell gene sequences, which became official on March the 4th, as you can see here, has hit this company. And this is even though China only accounts for 7% of sales. So, there are lots of little nuggets out there where you can trade this and trade this rather well. Any spaces that you're kind of like keeping an eagle eye on? I know you're more longer term, but
Yeah.
anything you're waiting on, any dates?
Well, I would just say in the context of our portfolios that obviously we have constraints, but across asset classes we allocate across many different areas. And one area that we've allocated to previously and that we've got a nice position in, and which we think could benefit from any form of instability and rate cuts potentially, and a weakening US economy is that sort of belly of the US yield curve. So 7 to 10 year US Treasuries. We've seen yields come down a little bit, which has provided that historic negative correlation between equities and bonds, particularly US government bonds. Obviously high yield does not fall into that category, but it's been really nice and useful for us as to be this sort of dampener, this ballast when we've got some really, really quite volatile moves in equities, which is in the context of only a couple of years is rather unfamiliar for some investors. So that's an area which has been,
especially new investors, right?
Oh, absolutely.
If they've just come in like the last 5-10 years, they would have thought, wow, this is like a walk in the park. You keep, there might be blips, but they continue upwards. Well, this might not be the case this time round. So it would be a real shock to some investors out there.
Yeah, absolutely. And obviously we've got a nice position in gold, which has been very helpful for us over the past couple of years, let's just say. And it's super important that when we're talking about our portfolio allocation, there's a lot of diversification involved. So we're always going to have exposure to many different areas. It's just how we tactically tweak the portfolio during uncertain times like this. But yeah, the fixed income world is beginning to act like it used to.
It should.
Pre-2022.
Yeah, it's taken a while.
Yeah, but I think we finally could be in the year of the bond.
The year of the bond. I like that. And as an Asian person, I really like that as well because, for a long time in Europe, the bonds were just kind of like not something you even considered.
Negative yielding debt for 5-10 years. I mean, Swiss, it was a famous one, German for a period, I think Danish. Huge swathes of Europe were negatively yielding, and now you're looking sort of excess of sort of 3-4% yields, particularly in the US, UK, continental Europe. You've got some very attractive yields there to pay a nice income.
Yeah. So now we've got we've got 2 minutes to go. We covered the main course. We covered yields. We covered maybe it's the return of the bond market. We've covered soybeans. Let's go on to some desserts. Let's go on to some dessert. Looking at the some crosses for you, because one of the things that can actually upset the apple cart here is that China has not yet turned on the exchange rate heat.
True.
They could really play this game and play it hard, and they've so far kept the yuan stable. And they haven't actually, hit back at Trump because of the levies. And
basically,
they could let it weaken, right? If Trump follows through on that 60% tariff threat, if April 2nd,
then it's almost you begin to get some offsettings for the Chinese exporters.
Yeah,
in terms of the weaker currency. So yeah, an interesting space to watch.
Yeah, another one that you could play as well. And it won't be too hard to find the names. This is, of course, not advice, just giving you some logical trade ideas, some logical places to look. China could also throttle exports by saying, if you do that, Trumpy, then we're going to lock down our rare metals, right? Our rare earths. See how that goes. So
that's important for sort of semiconductors, all those sort of things.
Your iPhones, right? There's even one, I love the colloquial name. I need to find the actual name, but it's called magic dust, and it's literally dust that they sprinkle on your chipboard, and it makes everything go faster.
Really?
Yeah.
I think we need some of that.
Yeah, we do need it. And on that note, we're going to have to wrap now, but do stay with us because we're going to be back with market measures and Patrick Terminius later on in the show, but stay where you are.
So this is one of the most important lessons in Beginner's Guide to Options, right? We're talking today about deltas. It's the first of our Greeks. Here it is, Option Greeks, Part 1, Delta. So we're going to focus on all four of the Greeks, right? They're important financial metrics that measure the sensitivity of options prices to changes in various factors like the underlying asset price, time, volatility, and also in interest rates, right? Now, this is going to help you understand what that price on the screen actually means, right? What are you exposed to? What would you like exposure to? What's your actual view on stocks like Nike or Nvidia or just the S&P 500 as a whole, okay? So it really helps you understand and manage your risk. And this is what is the most important thing. And what it's harder to do in just a stocks and shares portfolio, especially if you're only buying stocks and shares, it's very hard to manage that risk. Whereas in options world, it makes it really, really simple for you if you understand these four Greeks. Now, the first and the most important one is delta. What is your delta? Is something my boss used to shout out to me every day. What is your delta? Now, it is the rate of change of an options price, right? If the underlying Nike goes from $73 to $74, what does the option price do? How much does it change, right? That is what you're going to learn in today's lesson. Now, trades with a positive delta, right, with a little plus in front of it, benefit from the stock price increasing. Simple stuff. We're starting with the simple things. If it's positive, that means you are long. You're going to benefit from the stock going up, right? That's your bullish trades. So if somebody says, what's your delta, and you say, I am long, then that is a positive delta and you're benefiting from the stock going higher. You've got a bullish trade on. It ranges from 0.01 right up to 1. Now, because it's from 1 to 100, then that, of course, gives you that idea. We can use percentage, and we can talk in percentage terms as well as 0.01, right? That can be the same as 1%. Or delta 1, 1.00, can be the same as, oh, my delta's almost 100%, right? Now, the opposite can be said for trades with negative delta. Those benefit when the stock price is going lower, right? I wish I'd had negative delta on my Deckers trade because the stock's gone lower for about the past 4 weeks. But I don't. I've got positive delta, unfortunately. But if I had negative delta, I'd be happier from the stock going down, right? Now, negative delta, exactly the same, ranges from 0.01 to 1. So right in the middle, if my option was at strike price, very simple. Your range falls in the middle as well. It's 0.5, or I have a 50 delta or a 50% delta, right? So it ranges from 1 to 100. Now, positions with larger deltas are much more sensitive to the changes in the underlying price. Okay, so if Nike moves $1 and you've got a 90 delta, 0.9, you've got a really long position, and the stock moves just about as much as, sorry, the option moves just about as much as the underlying, right? Or the opposite, if you've got a tiny little delta, you have 5 delta, you throw around 5 deltas like they're so insignificant. And that's because the option price hardly moves with the underlying price moving, right? Nike goes from $73 to $74, and the option value goes up 5 cents, right? So positions with larger deltas have lower potential of profit. The probability of your profit is lower, and larger P&L swings compared to positions with smaller deltas, right? Your larger deltas have lower probability of profits and larger P&L swings compared to positions with smaller deltas. A 16 delta has an 81% chance of profit. A 20 delta has a 76% chance of profit. This is, of course, if you're selling the puts, right? If you're shorting these puts. And then a 30 delta, you see it's at 68%. Now, because of the larger tail risk, strategies closer to at the money are more expensive to trade, meaning limited accessibility depending on account size. However, the buying price reduction decreases as IV increases for all delta, right? I know I'm going to start losing some of you now because we've moved on. We've started bringing some of the other things in, right? We've already done a lesson on BPR. We've already done 2 lessons on implied vols. So just focus on deltas right now. A 16 delta, what does that mean? It means that you've got a 16% chance of finishing in the money. A 20 delta, 20% chance of finishing in the money, right? So these are out of the money options that you are buying or selling, all right? That's what I want you to get from this delta idea. If it's at the money, tell me in the chat, what delta is it when you are at the money? If I've got a $73 call on Nike, what's the delta? If the underlying share price is $73, it is 0.5, 50%. Now just think about it, right? If your strike price a minute before expiry is $73 and the underlying share is $73, 1 minute before it expires, right? 8:59 p.m. on the day of expiry. What happens if the stock goes up 1 cent? It means you've got 100 delta option and you will take the position, right? Because you've made a 1 cent profit. If it goes down 1 cent, then you've got no position. You've got 0 delta. It's a nothing, right? So therefore, it's a coin toss if it goes up 1 cent or down 1 cent, right? At that very moment of expiry. Therefore, a coin toss is what percentage of you winning or losing? It's 50-50. Therefore, when you're at the money, no matter how long you want to go back, it's a 50-50 chance of you finishing in the money or out of the money. It's as simple as that, right? This is where we don't need you. We call it Greeks. We put up the fancy symbols and everything. But all you're working out is what is the chance of me finishing in or out of the money. And at strike price, at the money, when the underlying equals strike, you've got a 50 delta and everything else works from there. If you're more in the money, your delta goes up. And if you're out of the money, the delta goes down, as we see on the screen here. 16, 20, 30. Those are out of the money deltas. Now, long calls have a positive delta. We've said that. Long puts have a negative delta, with a value indicating how much the option price changes per dollar move. We've covered that. What about when you're short those options? Now, short calls have negative delta, right? The seller benefits from the stock falling. So you turn it round, right? If you are shorting calls, which I've got in Nvidia at the moment, I want the stock price to go lower because the value of my short call drops because I'm short, right? So if I am short calls, I want the stock to go down because I make money. The value of that position that I'm short goes down. So therefore, it has negative delta. Short puts, right? We know I'm short puts on Deckers at the moment. I want the stock to go up, right? Now, if I benefit from the stock going up, that means I've got positive delta. So always think about it. What do I want? If I want the stock to go up, I've got positive delta. If I want it to go down, I've got negative delta. So it serves as both a directional indicator and a measurement of how much an options price will change given a $1 movement. It's got a double function, and that's why it's so important that you understand exactly what your delta is and you understand how to think about it. Now, when you're talking about hedging, this is the next level. Make sure you understand those first 5 pages first, right? What is delta? What if I want to hedge a position? And this is where the risk management side of it comes in and is really useful. Options can hedge stock positions by offsetting delta. For example, selling 2 30 delta calls reduces a 200 share position from 200 to 140. It's tricky, isn't it? Right? Your delta of 100 shares is 100. It's the same as having a 100 delta option, call option. I'm long 200 shares of Deckers. Therefore, I have 200 delta. What happens if I sell 2 calls against that are up here? So the stock's here, right, 115, and I've sold the calls at the 130 level, which I have actually done. Let's say those have got a 30 delta multiplied by 2. 2 times 30 is 60. You take that 60 away from your long. So it's negative 60. Take that away from your long 200, positive 200 delta. That leaves you with a delta of 140, right? Covered calls work this way. So premium collected reduces the max loss. I'm trying to reduce the max loss I've got on Deckers at the moment by selling calls. And short call delta partially neutralizes long stock exposure. And that's what we're talking about, a covered call. Adding more short calls further reduces or completely neutralizes delta exposure, though selling more calls than covered by owned shares creates undefined upside risk. Now, that's exactly what I've got in. Let's see, hope this works. I've been talking about Deckers a lot. Let's show you my exact position. I have 200 shares, but I'm short 3 of the 130 calls. Now, what does that mean my delta is? Let me know if you can understand this, right? My delta is long 200, positive 200 from the shares. If these calls are 30 delta calls, right, I've got 3 of them. So for each one, I go from positive 200 to positive 170 for 1, positive 140 for 2, positive 110 for 3. So now my P&L today, if Deckers goes up, it's as if I only have 110 shares, right? It's as everything else being equal, it's as if my P&L will represent that I've only got 110 shares. That's why delta is so important, right? So, for example, this line here would show me a profit of $200, and this would show me a negative loss of $90. All of the things being equal, right? So therefore, my net profit is 110, and the 110 is my delta from my net delta from it going up $1, right? Back to class. Now, on to page 7. We're almost done. We are almost done. That's why calls make hedges. Options market help you hedge risk in a fantastic way. The obvious question is, why do I want to do that? If I want to be long stock, right, why do I want to be short these calls? Because the calls reduce in time value every day. And that's one that we're going to come on to in the next few lessons called theta. So although my delta is 110, if the stock goes sideways, I just receive money, right? I don't lose any money from the stock going down. I just make money from being short the calls as the value of those calls falls every day due to the theta. Now, delta serves as a rough estimate of an option's probability of expiring in the money, right? We know that one because it's 50-50 when it's at the money. It's a 50% chance. So a 30 delta call has an approximately a 30% chance of expiring in the money and a 70% chance of expiring out the money. As soon as you get this, options become so much more simpler, right? You've got 100%, it has to add up to 100. So a 30 delta means 30% chance of it being good, 70% chance of it being bad. This approximation provides a quick way to estimate outcome probabilities instead of going into formal ITM in the money percentage calculations. Very simple. What are the takeaways? This is a big class, right? So you might have to go back and watch it again. It took me 2 years to get this. Delta is the rate of change of an option's price giving a $1 move in the underlying price, all else equal. Some people talk about 1%, but here at Tasty we talk about a $1 move in the underlying price. Delta can be used to measure the directionality of a trade, positive or negative. What's my net delta? Is it positive? You want the stock to go up. Is it negative? You want the stock to go down. Very simple. Delta can be used to accurately hedge the directional risk of options and stock positions. If you're long a load of stock, you can hedge some of that by neutralizing the delta. And option deltas grow stronger as the option moves in the money, right? So delta, if we Nike, we'll stick with that example, 73 strike price call. If the stock has good numbers on Thursday night and it goes up to 76, it's not going to be a 50 delta anymore. It's not going to be 0.5. It's going to go up. It's going to be 0.6, 0.7. It might be a 70 delta option. So you're longer than you were before. All right? So option deltas grow stronger as the option moves further in the money and weaker as the option moves out of the money. That was today's class. It's a biggie. It's a really important one. You understand deltas, you really start to understand options. Thank you for joining me. See you after the break.
Hey, hey, welcome to the show. And we are here at Trade Expectations with Jack McGuire, my vanguard, my ahead of the game here at IG. Hey, Jack, how are you?
Morning, Ange. How's it going? Not too
Good,
bad.
really good. We had Issa talking about, delayed gratification this morning and why patience sometimes pays off in trading. So holding on to, your strategies and, not unwinding the profits too soon and letting the losers run, that sort of thing. But I hear, speaking of delayed gratification, that you are going to bring it forward and you're going to have Friday off. Where are you off to?
I think this is now my third Friday in a row off, actually. So I think I'll be getting a few Friday lates for next month, no doubt about that. I'm away, just a little thing, going just outside London, staying in a sort of cabin.
Oh, nice.
Bit of a chilled out one. Yeah, I was at the races last week, so I'm trying to calm it down a little bit. Yeah, I was there on the Friday. Really, really good. But
Okay, so this is
it's
not
a
going to
long
be
day.
this is not going to be like the raging all-nighter cabin party. This is going to be like the detox
Don't
cabin.
think so.
The detox cabin.
Yeah, I'd be very surprised if it was a lively one.
Where is this cabin again?
I think it's like near Oxford. I don't do the planning. So.
Well, we'll kind of get the address and get everyone on the Trade Live with IG show to come and gate crash your cabin.
Let's do it.
Speaking of gate crashing, European stocks, had a good session yesterday. We saw a bit of that rotation, but today we're seeing red here. Let's talk about volatility as well, because we talked a lot about volatility heading into this week, and Safe Harbor was here also saying that it was unlikely that volatility was going to slip, and we are seeing some signs of stabilization, but really early days yet, right?
Yeah, definitely. It's definitely calmed down from last week. I think you can see it in the VIX. The VIX has come down about, I think it might have peaked at maybe 25-ish points last week. We've come back down now, settling nearer to that 20 mark. And you can see that flooding through to other markets as well. Definitely seeing it in the daily space. That's sort of our most interactive feed on volatility for each session. The DAX has come down massively. That was an outlier last week. How high?
It was like
volatility.
what is it? Someone from the vol desk was saying, what was the term? Bucking Bronco, I think was one term. I'll show you the hourly chart here, people, just as a reminder as to how much volatility there was. And this was incredible, wasn't it? Because it wasn't due to any sort of, big news out of Germany. I mean, that loosening of the coffers, that was pretty much a rubber stamping exercise. A lot of this wild movement was down to Trumpy.
Yep, exactly. I think he's the orchestrator of financial markets now. We see tariff threats, and there was also the stories of sort of defense spending that prompted that crazy rally to begin with on the DAX. But yeah, there's no certainty anymore. So I feel like that fed into quite a lot of the volatility. Now that it's coming back down, I think we could even see it flare up again. I wouldn't say this is the complete end of the sort of cluster for the next weeks, especially the start of April, where we see those tariffs potentially come in or get more of a picture. That's the problem. We don't have the full picture yet, so you just get drip fed it and it feeds into volatility here and there.
Yeah, I think we're unlikely to get the full picture for a while. Speaking of which, let's whack up the viewer chat there. Neil chiming in after you mentioned that Trump's, in charge of the markets now. It looks like Neil agrees, making the market, he says. Also, Mango chiming in saying Yahoo Finance prediction Palantir could surge 1.3% in the next 10 years. Do you follow the Yahoo Finance prediction? Mango, let us know. And David Boyce the Voice saying Jack Wisdom Tree released a new EU defense ETF to add to your list. So I think there's a lot of chatter there about defense at the moment, and especially getting exposure to that given the uncertain times. Just going back to the VIX, Jack, because although it has come down, it is still holding at that 20 handle.
Yeah,
and we
still
are
holding at the 20 mark.
We're counting down to this coming Friday, which is expiration, options expirations. How does that play out in terms of volatility?
With most of the expirations, you'll see volatility ramp up as you get close to that expiration. I think at the moment you see quite a bit of a gap. If you were to pull up a sort of front month versus so March versus April contracts, you'll see the implied volatility there. It's sort of quite a bit of a shift. We're probably 7% higher at the money on the March contract versus April. This generally happens, so I think it's not unexpected to see it. I'd probably say it's quite a big gap for this point of the week. You'd normally see that explode as we go into Thursday evening and then on Friday for the Europeans. But I think the Fed that we've got later today will probably encapsulate quite a lot of that. That might come down significantly later on. Because obviously, yeah, it will be built up quite a lot for that Fed. You'll also see the daily vol behaving a similar way, but the sort of expiration for those will be an hour after, whereas you'll see the actual vol come out when we talk about weeklies and that monthly that goes off on Friday.
Yeah, yeah. So I guess the key thing is if you don't want to be caught up by that explosion, just make sure you come out of your positions, right? And then re-enter after the event has passed.
Yeah. And just while you've got the VIX up, it's definitely worth pointing out, as we have come back down to 20, we're still seeing that strong upward skew there on the vol. So in fact, as we've come down, it's probably strengthened somewhat, just to see that there is sort of the potential, or the market sees a potential for a flare back up in vol and heading back up to that sort of 25, 26 mark that we hit last week. I would not put anything past that. We just need the right conditions and an announcement or two.
And as we get to, past the Fed, past the expiries, is there any sense, the trading floor is always a great place to kind of like feel the vibe, right? Because I've been on the show, I haven't had a chance to walk there yet. Any sense of what the vibe is telling us about, the coming week? Are we going to see, continued support around the 20 level? Or are we going to see, potentially vol keep trickling higher as we get closer to April 2nd when Trump is likely to announce more measures?
Not a massive feel around today. I think a lot of the clients that are trading are probably coming off what's been a 2-3 week period of fairly intense volatility and some pretty significant moves. I think I said this last time that we were on, the scale of the decline that we've seen in the US indices has been fairly intense. It's a bit of a breather period at the moment, but it's come down around 10% since the start of March, around that time. So it's a pretty intense period. I think volatility's calmed down now, but I think a lot of people are probably repositioning themselves and trying to guess what's coming forward. I wouldn't be surprised if volatility flares up again. We're definitely not at the floor just yet, far from it.
Jack, which was more intense, the markets last week or the races? How did you do, by the way? How did you do at the races? I forgot to ask you.
I actually ended up on the Friday. Over the week, I'm not too sure. But yeah, the Friday I did all right. Let's just, I'm not sure how much money went on the Guinness at the races because they were quite expensive. But in betting terms, I was up anyway. I'll take the win.
I take the win. Speaking of up, pushing up spot gold here on my chart because that is yeah, well above that 3,000 an ounce level. Where and I have to say again, I'm surprised we didn't, sustain this a lot earlier, given everything that we've seen so far. So, the last time we spoke about this, I remember, I think by that time, Jack had kind of touched the 3,000, but it came back down again, right? And I was saying to you, really surprised it hasn't maintained, just, sustaining above that 3,000 ounce level. But what does volatility tell us about spot gold going forward?
It's fairly easy. I haven't seen a massive flare up here. We've still got that sort of upside bias. In fact, the downside skew on the volatility is probably eased off a little bit, which just indicates that we probably expect a little bit of momentum now.
Which one are you looking at, the weekly, or do you want me to put up the April contract?
Pull up the April contract, please.
Here we are. Add to workspace. There we are.
Yeah. So this actually will be going off quite soon. This is off next week, expiring. So see it here somewhat. So we've got a bit of a stronger skew to the top side, and then that downside skew has calmed down over the last few days. I think we probably expect gold to keep rising. I don't know if it's going to have the same pace as it did on Friday, with sort of equities coming off quite a bit, and the University of Michigan sort of expectation for inflation giving it a bit of a kick to the top side. I'd probably say we expect the upwards move to continue as we have this instability in other areas and other markets. People will come there for a safe haven.
Is this going to be similar in the way that we treat it, given we've got the Fed and the expiries coming up? You know, should we try and come off positions and then put them back on, but avoid the two events?
I'd say if you have a position, definitely be careful of the Fed later on. We're not expecting any shocks whatsoever in terms of the interest rate decision. I think we're 99% for holding rates as they are. But we do have dot plots coming out. Any shift from expectations there, they could have a significant move behind them, and gold will definitely feel the impact of that. So watch out for the Fed. For expirations on Friday, you probably get away with sort of having less of a concern there. The Fed will definitely be the main event to keep an eye on.
Yeah, and just a reminder, trader friends, when JP speaks, it comes in a tricky time because we've got this political, can we even say uncertainty? Because there's just so much uncertainty. I feel like we're doing a disservice saying that, you know, political uncertainty, policy uncertainty. It's almost, Jack, it's almost like saying, like, you know, there's oxygen in the air. But you know, the great discussion this morning with our viewers as well is the US going to achieve, is it in slowdown territory or recession? And of course, JP's comments are going to be passed for, you know, any comments that he makes that might point towards one of those two. Gut feel, Jack, before we go, what do you think? Is the US economy slowdown territory or recession now?
I'd probably say slow down. I wouldn't expect them to have recession immediately. It'll be interesting to see what Jerome Powell thinks. So the data that we had on Friday, I think, is going to be quite a significant factor to play into the minds of those Feds, the Fed voting and what they say in the press conference.
Right. Thank you very much, Jack. It was a pleasure, and we will touch base later on because, I normally kind of tap you at around like 9 p.m. at night. Sometimes he taps me back, which is great. Stay with us because we're going to have Patrick Terminius coming up next. the next shiny new thing is Patrick Tominius from Stockholm. Welcome to the show, Patrick. How are
Thank
you?
you. I'm just great. How are you?
Yeah, good. The sun's out. It's really, really still quite cold here, but I love it when it's crisp and sunny. As long as it's sunny, I'm pleased. I can't do the
I
dark
totally agree.
and gloom and everything. Speaking of which, it's been quite a roller coaster in the markets the last few weeks, and I feel like it's Wednesday, but it should really be Friday. I feel like we've had so much all put in the last few weeks, but we've got the Fed and also the expiry still. What are your expectations going into those two big events?
I mean, I totally agree with you. It's a busy time to just keep track of everything.
Yeah. I feel like I've
It
left
is,
my, the roller coaster, but your organs have been left behind somewhere
yeah.
at the start.
I think I just left my brain somewhere. I mean, it's just it's just so much coming in, and we have so much data in the US, but also Germany now with just the SEV index, but also the vote yesterday, and then we have Swedish data, of course, that I have to monitor. So it's a lot, but it's exciting. Luckily, we don't have companies reporting at this moment. That will be just an overload.
Right,
but,
right, yeah. And this is happening despite any earnings noise around.
True that.
Just
yes.
whacking up the DAX, the Germany 40, as you were talking about it, because, for those of you that traded this last week, good on you. You're braver than myself, because that was so much volatility that it was incredible. I think the term on the volatility desk was bucking bronco when talking about the DAX. But taking a look at the daily chart, if you traded the DAX this week, you would have had made some gains this week, but we're seeing a bit of a retracement as we speak.
I think that if you're looking into the DAX, it could be good for you, or could be interesting to have a look at how the euro against the dollar is trading, but also how the 10-year yields so the spread between the German 10-year and the US 10-year yields. I think there's a correlation between the three of them. So that's what I monitor when I look into the DAX, at least.
Yeah, and also checking out some of the other indices as well, because it's it's been quite still very exciting 2 sessions. We're seeing the DAX give back some gains, and the FTSE as well, but they did see gains in the previous session. The US Tech 100 climbing a bit more now, up 1/3%. Wall Street and US 500 also licking their wounds there, but they have come off pretty rough weeks there. The Asian indices, they're looking in the black at the moment. Let's have a look at some of the individual movers on the oil sessions as well, whilst we can. Seeing a lot of Ocugen, Tesla, some of the biggest gainers there, Plug Power as well. But on the losers list, we have Beyond Meat, Goldman Sachs, and also Barrick Gold down 0.5% there. What do you expect the rest of the week from the rest of the week, given we've got the Fed details out later today? What JP says, of course, is going to be more important than what the Fed does, because that's already baked in. But what are you expecting out of the dot plot, Patrick?
Yeah, so as you say, it's already baked in really around the Fed and what Powell eventually will say. We have some strong data coming out from the US, house building data, above expectations, and other data that sort of puts the Fed in a sort of a dilemma here. So I think they will have a hard time figuring out what direction the economy is actually going, and what to do, because you will see that GDP will start to slower. So the activity in the US will starting to actually go down, and you can have a look at the GDP now from Atlanta Fed just showing that. So, but still having a high interest rate actually stimulative in the sense that you have the interest spending from the US. So I don't think that will be. I'm not expecting that to be a big mover this week. This week is of course options expirations, and that's for the weeks for the monthly index and equity, but also the quarterly. So that's a big week for that. And that I think could move the equities index daily, intraday, but not so much. Will probably trend in consolidation line this week.
Just taking a look at the Atlanta Fed GDP now, real GDP estimate for 2025 as well. This is for the first quarter, and a real reminder there for those of you watching this, or indeed, you've got your what is it Rich normally has? His microwave meal and a glass of wine to watch JP speaking. That is his evening sorted out. Whereas my evening, Patrick, was yesterday when I was watching Jensen Huang speak at the latest Nvidia.
Oh yeah, you did. Okay, I missed that.
I loved it. Did you watch it?
No, I didn't.
I love the San Jose versus London time difference, because when he does his announcements and his speeches, which go on for 2 hours, by the way, it's bang in line with kind of like dinner time here. And so I have it on and I'm kind of like preparing dinner and listening to, petaflops and tetraflops and, full stack and, how the chip and data center universe is going to change is all kind of really nice, because I can multitask at the time. Speaking of multitasking,
I'll just add that in Sweden we have a really nice thing, and that's we all get salaries on the 25th, except for us at IG. We get our salary 28th.
Why except you guys at IG? When do you get your?
Yeah, because it's not a Swedish company, so they have some British idea. I don't know, but the rest of Sweden gets the salary at the 25th every month, and on the 24th we have something called Uppesittarkväll. It's like it's a TV show just before salary, and they invite lots of analysts, but also just interesting people within the finance field to just talk about different stocks, what stocks to buy. And that's something that people just share images of how they just pour up some wine, have some beer or anything, and just it goes on for several hours during the evening. So it's really a nice tradition here in Sweden to have a look at that.
Amazing. I should give me the email. I should send my picture in of listening to Jensen and cooking at the same time. But for those of you that are going to be watching JP, just a gentle reminder that it happens or will start at 1800 GMT over here. That's 2 p.m. EDT, but 1800 GMT. What will you be doing during that time, Patrick? Are you going to be I don't know. I guess over there it's not too different from you. It'll be dinner time as well, right?
It will be, definitely. I will go prepared with that.
I'm watching out for any deviance. So for me personally, I'm watching for any deviance from him saying data dependent. If he says it is not data dependent, anything at all that deviates from this, for me, is a red flag. How about you? I believe you've got a chart to show us.
Yeah, it's on a different topic though. So this is a chart I brought on VIX expirations.
Nice.
And VIX expirations is often within 1 or 2 days from the equity and index expirations on the S&P 500. So they're similar in date. But it's quite interesting. I just brought it to show you that it's interesting to see where the expirations are, and that they actually tend to be on the high end and the high points, and that we are trading between the expirations. We have been trading down actually, and then regaining again. So we have the Trump trade, which is the last month from February. We started to talk about the tariffs, and then we have the magnificent trade all the way down to where we are at now, and we have this huge expiration, which is this circle for the VIX, but then this purple square is actually the quarterly expiration. And then we have, I just highlighted the dates for the April and May expirations, and I just put them on a level where Max Payne. I don't know. Have you heard about the theory of Max Payne?
No, tell us the theory, because I think I know just by looking at the your purple box and I'm going to try and guess, and please tell me if I'm wrong, but you know, the circles where the price action is makes me think that it's probably alluding to the fact that the price action is going to traverse towards that purple box. Is that right?
Yeah, so the theory behind maximum pain is that maximum pain highlights the level where the most options are traded.
Right.
So if you combine the call and put options, that's the level where the most options are traded. And the theory here is that market makers tend to try to buy or move the index or the shares stocks against this level, because then they will have maximum benefit of that, and you will have maximum number of losers who have bought options. So that's the maximum pain level, and you tend to actually trend towards those. So I just highlighted that for April and May, and also for the last of the month, the quarterly expiration. As you can see, they are above us. But what's interesting for the next period is that you have some of the between these dates, you have maximum pain actually quite a bit lower, even lower than we are today. So what I really, if you're going to look into this and just have this as for your opinion or trade expectations going forward, you will actually see a consolidation period going just sideways, but with huge swings. So you go up to 58, but also back down again to 55, up again to 58, and then back down to 55. So that will be the lines, or the consolidation targets for the next couple of months here.
Interesting. And how do you draw that the blue line? Talk us through the blue line.
Oh yeah, so sorry, the blue line here is just the moving average. So
right.
I just
which one? 200? I can't see from here.
I can't see. I think it should be the 200.
Or let me know later when you find out. Yeah, this is really interesting. I like that maximum pain concept, because I believe I've heard quite a few traders talk about this, FX traders, because there are a lot of ways to trade crosses ahead of the 10 a.m. New York expiry. So be aware, lots of expiries taking place as well. If you trade Forex, then 10 a.m. New York time is going to be the usual expiry time. And bear in mind the time difference as well that we've got in play until the end of this month. I guess the other key thing as well is, we talked about key dates that we were watching out for. April 2nd is when I'm expecting to hear retaliatory measures in terms of tariff talks. We've also got potentially sometime next week further details about what actually transpired in that talk between Putin and Trump. Any key dates that you're watching out for that our viewers should know about?
I mean, it's the same. I mean, Trump is interesting at the moment. He drives markets with his tariffs. And we have seen now, I remember when we started talking in February about the tariffs, and I had the idea that he would use them to leverage his deals and maybe not really enforce that hard on tariffs. But we have seen that he enforces them pretty hard. So the 2nd of April will be really interesting, and that's a date to look out for.
Maybe if you are looking to trade this in the near term, you might want to look at the Forex markets. They tend to be less volatile if the volatility on the equity side of things is too much for you. But Forex traders have found that there might be a bit more clarity, especially if you're trading and thinking that the dollar is now far freer to rise should the trade dispute intensify. It does look like this is the dollar basket there that we are seeing a bit of a consolidation now at around that 103 handle, yeah, have a look at other, if the equity market's indeed too volatile for you, have a look at the forex markets. Patrick, we're almost out of time, but you know, what are you going to be doing the rest of your day?
Oh, it's just writing an article and just following the market, and I will be occupied with that.
Having a look at the chat as well, just to see some of the comments that have been coming in hard and fast. I think someone mentioned earlier, quite funnily, that this is after we're talking about Trump and the uncertainty out there, and someone saying that perhaps it's get to the point where farting, you'll start farting deliberately, loudly for attention. Arthur Fox Haig there. Mango, I love your optimism there. Mango saying Trump is moving markets for his own interests. Soon markets will stop reacting when he speaks. It's getting boring. I do hope you are right. I love your optimism there. What do you think, Patrick? Do you agree?
I mean, definitely. So I see it, if you go back to the options world again, that when you are in a situation where you talk about you having negative gamma, but the thing is that until this expiration this month, we are heavily on the put side. So put call ratio in open interest is actually 1.7 at the moment. It was just a few days ago 1.77, and that's really high number. So the options markets are really heavily on leaning on the put side. So what that means is that as people buy risk for uncertainty, it actually drives the market, but it also drives intraday movement. So I think after this expiration, my idea at least is that we will have smaller intraday movements, and we will react less to Trump's different ideas and comments and attention-seeking moves. So yeah, I think that's at least what I expect, that we have been moving a lot because of this underlying options market, but we will move less going forward after the expiration states.
Phew, I'm looking forward to that. Thank you so much, Patrick, and have a great day. And it's such a pleasure having you on, because you explain these concepts for us so well. Catch you on the floor or on a call later on. Have a good one.
Have a good one. Bye.
Oh, yeah, it is Tuesday, March 18th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. It's Tuesday, everybody. We pulled a little switcheroo on you today, where we've got the one, the only, the incomparable Mr. Chris Vecchio. Chris, how you doing, my friend?
Good. You know, you said you didn't want me on Wacky Wednesday. You said come over for Telepathic Tuesday. We'll look at each other silently for 60 minutes. And I said, okay, let's do that. So I'm here.
Do you think we get more views or less views if we just stared at each other for 60 minutes?
I think like 38% of the appeal of the show is your baritone voice. So I would assume we would lose viewership.
If 38% is my baritone voice, then the other 62% is your chest hair, which you are not sporting today. So I mean,
it's not Wacky Wednesday.
You've already killed our viewership, man. What were you thinking?
I apologize.
It's funny to see the slow tastification of Chris Vecchio. When you first got here, you're clean shaven, you'd wear button-up shirts every day. Some days you even had, I think, like the vest, the finance vest on, and it was like layers of clothing. First the vest was gone, then the buttons would open up, then the 5 o'clock shadow. Now there's no button-up shirt. It's a t-shirt. It's like this slow tastification of Chris Vecchio.
Yeah, I'm wearing a cashmere sweater, so that's the tastification of Chris Vecchio.
Is it really?
Victor,
it's a blue T-shirt.
You think a man's got to be comfortable when he's handling serious business.
A man. You're using that term loosely. Shout out to everybody watching tastylive.com, as well as all of you watching on Tasty Trade desktop and mobile applications. If you don't already have both, go get them, because there's only one place you can participate in this little chat in the middle of your screen, and that's on Tasty Live's YouTube channel. So head on over to the evil Tasty Live YouTube channel and jump in the chat. Bang your skull against the keyboard, or your metacarpals or phalanges will do. Spoof the Google algorithm into putting us in front of as many people as possible. Sleepy Mocha in the chat said, call HR. Vic is objectifying Vecchio again.
Thank you. Again, by the way. People take notes, Victor.
This is probably the fourth time I've referred to you opening up more buttons on air. And it's making people uncomfortable. Chris Vecchio, open-ended question, my friend. Risk 56.68. Cash down 1% in the S&P. The Nasdaq was down 1 2/3%. I'm obligated to mention the Dow Jones was also open for business today, which is down 2/3%, and the Russell down about 90 basis points or so. A little bit of give back from yesterday, my friend. What say you about market action in a pretty big OPEX week, a pretty big FOMC week, pretty big week in general, man?
Well, at the end of last week, I saw a breach of the downside momentum in both ES and NQ. So I took the opportunity on Friday.
Downside momentum. Okay.
So the two facets that define the downtrend in S&P and NASDAQ since mid-February, you hadn't seen a close above a prior day high since February 19th, and you hadn't seen a move above the 1-week moving average on a closing basis since February 20th. And on Friday, both of those conditions changed. So as we were going into the close, I took a small long position, short put spread in ES to see what's the worst that can happen, right? We're either going to bounce from here, we're 100 points from the low, or we're going to dive into new lows. 10% off the highs, 2.5% off the lows. It's a pretty good risk reward given the fact that downside momentum's broken. Yesterday looked like we were getting decent follow through. Today we're back to scratch with the market falling unchanged. I suppose in a sense that's good news ahead of the Fed. If you want the market to move higher after the Fed, you probably don't want it ginned up too much in front of it, because that to me would be a rally predicated on, they're coming to save the day. They're going to tell us something that's going to make us feel better. And the reality is we're probably not going to hear anything that's going to make us feel better. If anything, Powell's going to tell us nothing that we want to hear, because they can't be proactive. They're going to be reactive, and nothing's happened for them to raise any alarm bells yet. Growth is still positive, but probably at a weaker pace, maybe around 1%, a little bit lower, annualized in real terms. Inflation is going to have a 2 handle still for the quarter. The unemployment rate's still going to have a 4 handle, so what's the Fed to do? Nothing yet. And I think the market knows that. There's a 1% chance of a cut. Either way, though, I want to be long here. I'd like to pick us up after a 10% move to the downside. I'm trying to nibble right now. But the fact is that the rotation remains crud. Yesterday, even with the market rallying, XRT is your only bright spot, where it was up over 2% or 1.7% or so. But outside of that, the rest of the leadership group were all the defensive names: healthcare, staples, utilities. And then today, of course, it keels back over, where the biggest losers are technology, semiconductors, retail, right? Consumer discretionary. And that's just a bad mix. And that's been the mix for the past month now, where those are the 4 sector ETFs that are leading on the way lower. So right now, I'm still holding the short put spread. I'm not happy about it. If we hit new lows, I'm going to cut it, take a small loss. it seemed reasonable to take a pickup off the lows here, and if also for two other reasons, I suppose three other reasons. One, second half of March tends to be bullish. If you are going to see a market rally, good years or bad years, second half of March things stabilize and or turn higher. So a short put spread makes sense through the seasonality lens. Likewise, we had just seen after yesterday 2 90% up issue days, which are fairly rare. And given how the markets behave historically when those occur, we see that 3 months, 6 months, 9 months, 12 months later, you have positive returns. And then CTAs had reached their most net short level since October 23, a sign of clear exhaustion in terms of sellers coming in, those momentum chasers on the downside. So it feels like sentiment stretched. I suppose a fourth thing, they had a picture of Donald Trump with a gasoline can on the cover of The Economist, and The Economist is a pretty good contrarian indicator. So with those four things and the technical facets that I mentioned earlier, it felt like there was enough to look long, but we'll see what happens.
Yeah, I think I was with you last week. I was short vol, a lot of vol, and now I'm a bit more, I don't want to call it neutral, but I told you I think 5,500 is sort of like the new fair value, and we're somewhere between that fair value point and the upper extreme, which I think will end up being 5,800, testing that level, which was support for a really long period of time. So we're somewhere in the middle between those 2 points. So I don't love the long, and we're probably getting to a point where I would look to fade, like above 57. I'd probably look to start fading the market, which is sort of ironic because if we get there, a lot of the feeling in the market is going to start to have less fear. Like, vol will probably drop to something that feels like normal again, like in the 18s. The headline, the narrative risks are going to go away or ease in some way, shape, or form, and the market's just going to get used to them. I think, I don't know. It's hard for me to imagine, like, what would have to happen for us to get back to like 6,100 in the next 45 days. What do you think would have to happen?
Clear, concise plans from the Trump administration about what the trade agenda is. I retweeted this earlier. Like Maria Bartiromo called out Scott Besson today in his interview on Fox News. He was talking about tariffs being important for helping with food inspection processes in foreign countries because they are inspecting food and products from the United States in a manner with which we don't inspect theirs, and that's not fair. And Bartiromo's first response was like, this is the lack of clarity that we're kind of talking about. And speaking from her perspective, she says something to the extent like, I've been talking to corporate America, and corporate America says it's for this reason or that reason. It's for, first it's for trade, then it's for fentanyl, then it's for income taxes, now it's for food inspection, right? Like, what's the purpose? And so there's no clarity right now. Corporate America needs clarity. And so going back,
go ahead.
So going back to my own voice, like I've called this Calvin ball tariffs, right? The game Calvin ball from Calvin and Hobbes, where rules are made up as both Calvin and Hobbes play the game to fit their immediate needs. We've jokingly called it the Michael Scott snip, snap tariffs because they're on again, off again for capricious and arbitrary reasons. Even if we think there's a North Star there of like Fortress North America, like corporate America is not going to plan around the notion that maybe behind the veil there's a corporate a Fortress North America policy coming together when the signaling from the administration has been so all over the place. So I mean, if Maria Bartiromo is doing this, Victor, like she's firmly in Team Trump's camp, and I think she's trying to make it clear to them like the market just needs clarity, whatever direction that is. Maybe a direction that you don't like, that I don't like, that I like, that you like. I mean, who knows? Somewhere in between. But the market just needs a North Star.
We're not going to get that in the next 30 days.
No. You say in the next 45 days to get back to 61?
Yeah, it's not happening. I said this to the people. I don't know if this is a smart thought or if it's just, simple-minded, but I'm going to throw it by you. Like, here's what I think is happening. The president sort of campaigned and promised a constituency and a base peace, and in a roundabout way, sort of fiscal responsibility. not explicitly, but there's sort of an implicit fiscal responsibility embedded in bringing inflation down and all of this other stuff. So I think there's two ways to go to manage foreign policy: one with a carrot or with a stick. And if you're promising peace, then you're putting your stick on the shelf. And if you're promising in an implicit way fiscal responsibility, you're in a way putting your carrot on the shelf as well, because we're sort of saying we're going to turn off our government money printer, and the grift is over. So if you don't have the carrot and you don't have the stick, like, how do you influence foreign policy? And I think that's how you'll end up landing with tariffs, because you can still manage your fiscal discipline in a way, and you can still have influence over foreign policy through an economic lens without necessarily threatening war or anything of this nature. What do you think about that sort of simplification of what's happening out there and how you land on tariffs, whether it's right or wrong, but just how you land on there from a game theory point of view?
I feel like there are, tariffs feel like it's, Thomas Sowell once called them, weapons of economic warfare?
Master
I know there's
selection,
I know there's like a Thomas Sowell account on Twitter or X that apparently tweets things. Yeah, and you know what? This guy tweets nothing that Thomas Sowell would say. First off, the guy's alive. Second, I have like 4 of his books on my bookshelf here. The guy's vehemently anti-tariffs. He would not be cheerleading what the Trump administration's doing. So it's crazy that I keep seeing this appear in my feed. But to that point, like, you don't start with dropping the A-bomb. I think the data that we're already seeing here today, if we talk about this being a tool,
what do you do?
Call in the trade ambassador from Canada and say, let's have a meeting, and the USMCA runs out next year. It's in no one's interest that this trade deal expires, lest we have all these trade barriers automatically reconstructed again. So let's just get to work on it now. Let's do it right now.
And they go, okay, what's in it? What's in it for me?
And I go,
why should I do this? Canada goes, why should I do this?
If we can't get it done if we can't get to an early framework within the next 90 days, we're going to levy the tariffs. You don't start with putting on the tariffs on a demand coming to the table. They're going to have to come to the table either way, or the trade deal expires, right?
So you think? No, I'm saying even if you put tariffs to the side, right? I agree. Everybody on this stream, for the most part, is going to be leaning more towards free trade. I think. I'm guessing. But I guess I'm curious, what's the mechanism? I sit down with a world leader. What is the mechanism of soft power for the United States, if not for more money?
USAID. But I suppose that doesn't matter anymore.
No, that's more money. That's more money.
Well, no, we can do the tariffs, right? The tariffs can be part of that negotiation, but it should be part of hey, listen, I want to sit down and talk with you guys. I want to get a framework in place within the next 90 days. If we can't get something in place within the next 90 days, then we're going to start implementing the tariffs. And here's how we're going to lay out the tariffs. First, we're going to do aluminum and steel. Then we're going to do lumber. Then we're going to do reciprocal across the board. And we're going to escalate this, effectively moving from where we are now to imagine a world where tariff rates would be if the USMCA didn't exist. And we will actually, instead of letting it go from here to hockey stick up to that immediately, we're going to slowly push the tariff rates up to there to give you guys the time to adjust instead of a rug pull. And to avoid those adjustments and the rug pull, let's get a deal done sooner than we have to, than the timeline would otherwise afford us. So keep the stick out there, but also have the promise of getting this done. And you know what? How great would that have been for the Trump administration and for this government in Canada, where it's like Trudeau and Trump going back and forth and negotiating, and Trudeau can't get a deal done. And for the Conservative Party up there, all of a sudden,